If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. Good morning, everybody. Welcome back. Hope you are doing well. Inflation part 2 today. We've got the producer price index data coming out. Let me just switch our screen here. There we go. We got the A1 Live discount QR code there for you if you are interested in checking out Ola Prime. They've been really awesome sponsors of ours, helping to keep the show on air. So thank you to everyone for being here. I hope you are doing well. I don't want to, we've got to get into producer price index stuff here, but I am really pumped about the new indicator. If you're in the Discord, then you probably just saw the announcement that I made, which came with a wonderful meme. I don't know if we have any cat people here, but cat guy right here. I mean, check this out. This is my mug, right? Come on. Anyways, we put out an indicator this morning, a new options open interest tracking tool, the call and put wall indicator. I'm really excited to have this because it is something that I have, I love looking at options data. It's like one of the most telling things that you can look at. If you are a technical trader, the technical aspect of my trading has actually increased substantially in recent years, but not in the way you might think. I'm not looking more at candlestick patterns than ever. I'm looking at the options technical data more than ever because it is incredibly telling. Like, for example, the way to read this chart, we're looking at SPY. Let's just switch this over to gold, for example. We're going to switch our symbol. Hold on. We're going to switch our symbol to gold, GLD, the ETF for gold. And we're going to look at what is the current price of GLD roughly. We're looking at 370. All right. So we'll put 370 in, hit enter. And there we go. We get the current price marked as 370 here. And what that's telling you is that if you are looking at GLD or gold in general, you notice right here that there is a huge open interest right there at the, what is that, the 360 level? The 360 level is a major level of potential support because right there is what we call the put wall. Okay. The put wall is in reference to a major strike price level where a lot of volume on the put side has traded or is open, right? Open interest. Check this out. So when we now go to our GLD chart, 360, that's the level. Look at this. Look at how interesting. They say technical analysis doesn't, it's useless. I don't know, man. Look at this. 360 perfectly lines up with this support level. So the way to read this is that 360, which by the way, we can equate that on XAU USD, the spot price of gold right around here at 39.35. Those are major levels of potential support according to the options market. Does that make sense? Does that, if that explanation was simple enough, give me a 1 in the chat if you don't mind. When can the markets go back to some kind of normality? Never. The markets are never normal. You should never get comfortable. It's very rare that markets, and to be honest, if you are defining normality by the VIX, this has been a relatively docile market. I know that's going to trigger some people, but listen, look at your kind of, let's look at your monthly chart for the VIX. we've been in mostly a relatively calm market. I know it doesn't seem like calm when you look at, headlines, et cetera, but in actual market moves, understand, and I'm not trying to, disrespect you in any way, but understand that it can get much more volatile. If you have not been trading for a while, like if you've been trading for less than 5 years, then you may not recall or have experienced 2022 volatility when the Fed was hiking rates dramatically, or 2020 volatility when the world was shutting down, right? Those are some insane. You want to talk about insanity? People were begging for what we're in right now. Which again, I know there's a lot of headline fatigue and back and forth stuff. I get that. But there's no such thing as normality in markets. Volatility expands and contracts, right? That's maybe the closest thing you can. If you're talking about normality, we are very close to the 200-day moving average on the VIX. We'd call that somewhat normal, right? Normality is near the 200-day moving average on the VIX. Non-normality, I don't know if that's a good way of saying it, I guess is a 200 monthly moving average, is way above or way below, right? We're pretty close to, if not anything, we're probably lower than usual. Yeah, I mean, we've got a low VIX, frustratingly so, to be honest. I actually kind of like when the VIX is high. It gives me a lot more to do. I can sell cash secured puts. I can buy stocks that I like. I can trend follow on currencies that are moving. When you have a low VIX environment, you get a lot of chop. You get a lot of kind of grindy uptrends. Like this has been a very grindy, slow uptrend in the stock market. Gold has been probably the most interesting thing this year. Gold has been a pretty clean trend to the downside for the trend followers out there. Goldman has been wonderful. If you're a trend follower, like a pure trend follower, not a perma bull, that has been a tough year for you. But if you are a trend follower, throw a moving average on here, this has been pretty clean. Like if you're a trend follower through and through on the daily chart, and I know that I'm not trying to like upset anybody because I know it's been a tough year for a lot of people, but just thinking here, if we follow trend only, it's been okay. If you've been fighting the trend, it's probably been a little bit more painful. Now, granted, there are times where, trend following has been dominant on gold for the last couple of years. It's been a wonderful trend following opportunity if you've been following gold rather than trying to call bottoms, call tops. Is anybody willing to, and let me tell you, I've been doing this for 10 years. I am not better than everyone else. I have certainly been the one to try and call tops, call bottoms. Is anybody willing to self-admit, you know what, Nick? Yeah, I've been trying way too hard to call tops and bottoms in gold. If that's you, give me a me in the chat. It is a safe space here. You are not going to get made fun of. Trust me, I get made fun of constantly in my videos when I'm wrong. Join me. The water's just fine. Be honest with yourself. If you've been fighting the trend on gold, throw your hand up. Gosh, guilty. Yeah, I've been messing this thing up. The trend is your friend. Do you remember that expression? I'm sure you do, because every single one of us is the first thing you heard. I remember having this revelation so many years ago where I was like, dude, that's the first thing you learned, and I broke that rule over and over and over. Trend is your friend. Trend is your friend. Trend is your friend. Here I am trying to sell the top every day. Here I am trying to buy the bottom. I know where the bottom is, right? The trend is greater than me. That's the way I think about it. It's like I don't know better to call the perfect bottom in gold. Now, if you're investing, if you are not using leverage, if you're not, I'm talking no stop loss, I'm talking like buying shares of GLD or buying physical gold or buying stocks for the long term, then yeah, I think you can actually be a buyer and sit there with a small position and let it ride out of the long term. Like long term, I look at this and I think actually I do want to buy gold. Like I'm okay with buying gold a little bit here, a little bit here, a little bit here, but that's not what we're talking about here predominantly on this channel. On this channel, we're talking about active trading, right? If we're talking about active trading, there's no buys here for me on gold. Like from a tight stop looking for the breakout. There's no reason for me personally with my strategy. You might have a different strategy than me. There are people who counter trend trade and do just fine. But most of my success in my trading career and my experience personally, this might be different for you, has been not fighting the trend, riding the trend, going with it, and acknowledging I'm not the market maker. I'm not the big institution. I'm just one guy, and I'm just going to follow the trend until the trend reverses. Yesterday, we had the consumer price index number. It was much cooler than expected. Guys, today's number is very important. Producer price index. Let me not understate how important this is for us. Producer price index numbers coming out here in just a moment. So why does this matter? What is the producer price index? I thought CPI was the only one that matters. No. On this channel, and I invite you to subscribe. We're here Monday through Friday live streaming. It's me and a bunch of other wonderful traders who come on here. We do these streams all the time. Make sure to subscribe if you're new here. Check this out. The producer price index. What does that number mean? I remember when I was a new trader, I would just hear CPI, PPI, and just say, oh, I'm like a chart junkie. The chart's going to move a bunch. No. What does it actually tell you? What does it tell you about the trends that we're seeing in the macro and that could filter into the technicals? Well, the producer price index is a read that looks up the supply chain before it gets to you, before your Reese's Puff cereal gets to you on the grocery floor and you eat, 3 bowls of cereal a day from that stuff. Before you can go out and buy that, a producer has to get it there. They have to ship it. They have to manufacture. They have to, and that stuff, man, I feel like it is manufactured, right? Anyways. They have to get it to you. Producer price index numbers look up the chain before the consumer prices, right? When consumer prices are one thing, producer prices are another. And this gives us an insight up the supply chain, a little bit up the river, if you will, on price data. So today we are expecting to see on a year-over-year number, what are we looking at? We are looking at a 5.2% expected year-over-year producer price index core PPI. This is going to remove food and energy. And with including food and energy, we are expecting 6.2%. Previously, it was 6.5 and 4.9 respectively. So we're looking at a situation in which we're expecting producer inflation to cool off. That makes sense. Oil prices have fallen. We want to see this data confirm yesterday's CPI report. What do I mean by that? We saw consumer prices fall, but up the river, what are prices looking like? Right? Because what happens in the producer price data typically makes its way to the consumer so that your boxes of Reese's Puff cereal that you eat 4 cereal bowls a day of, where is that number going, right? Where's the consumer price index potentially going? Producer price index can often give us a clue. So it matters a lot. Today, we are getting that number in just about 1 minute to go here. In fact, we're getting real close. We've got about 30 seconds. I'm going to just switch over so that we can see lots of different charts at once. We'll watch the price data reaction here with 30 seconds to go. Like I said, if you are enjoying the show, don't go anywhere after the release. This is very important that we stick around and actually talk about the number. The number itself and the spike itself is like for the gambler crowd, but don't be part of them. Let's actually talk about what PPI means for us and what it could tell us about the trends going forward, not just in the next 30 seconds. Anyways, got 5 seconds to go. PPI coming in. You've got stocks here, Bitcoin, gold, silver, oil, and dollar index. Let's see if there is any impact here. So far, DXY, not too much of a move. Gold is slightly higher here. NAS slightly higher. SPX slightly higher. No substantial moves as of yet. Little bit of positive. Let's take a look at that data. Here it is. Okay. Look at this. More confirming cooling inflation, guys. Check this out. 4.7% core PPI versus 5.2% expected. Very nice. The producer price index year on year with including food and energy, 5.5% versus 6.2% expected. Very nice. So this confirms the consumer price index data as of yesterday that we've got some nice cooling off in prices going on. Now, granted, the same concept applies to our discussion yesterday, which is the most important thing to watch now is probably keeping an eye on the price of oil. Because if oil blows out in the next 2 weeks, right? If we're, again, we've got a stubborn rise in the price of oil. If this thing keeps rising, that puts inflationary pressures for the month of July back on. Understand, the CPI and PPI data that we just saw a moment ago, that's in reference to June data. So June data, where oil prices were falling, we have confirmed and seen evidence that, all right, prices have been falling in the month of June. Now, is that enough for us to conclude that inflation's dead, we're all good? No, it's one print. And we have to remember that, again, oil falling helped with that story. But if oil starts rising again, it reverses course. Does that make sense? Shorting yields is working. Nice. Let's take a look at yields. What are the yields world doing in response to this? Here's your hourly chart. So yields a little bit lower. Obviously, what we saw yesterday, which was interesting. Here's the CPI drop. Yields dropped hard. Gold rallied on that. Stocks rallied on that. And then they came creeping back. So today's question is, do you see a repeat on that? Do you see follow through in yields to the downside from yesterday's CPI? Or do we reverse course? And again, yes, we had ice cold inflation data, which is great. And I think that the market is going to price for that. The probabilities for rate hikes in the month of July have been dashed significantly. The question, though, is that when we're looking out for the rest of the year, could we still potentially get hikes? And the answer is, it really, in my opinion, it really depends on what happens in the Middle East. That is still a huge, huge thing for the market to grapple with. Taking a look at oil prices here today, and it doesn't matter if you trade gold, stocks, Bitcoin, etc. The oil price should be smack dab in the middle of your watch list right now, because if oil starts putting in technical breakouts to the upside, if we get back above 87.50 here on US oil, and the equivalent to that, whatever that is for Brent crude, if you start seeing this level start getting taken out, I've marked that as a critical spot, because if that gets taken out, we're starting to look at a situation in which we have completely this move here, right? This move straight down and to the right that we saw in oil prices. This is a daily chart, by the way, guys. The breakdown in oil prices, if that gets reversed, that puts us back no better than where we had been between the months of April and all the way up till June, right? Through May. If we go back into this point, I don't think the market's going to like that, right? The market struggled during this rally up in oil prices. Remember, if you are talking about stocks, if you're talking about gold, the worst of the sell-off did not take place here. It took place here on the run-up in oil. So I think we need to be watching this, because if you get that run-up in oil prices, that very well could trigger a short-term sell-off or pullback in equities and in gold. Now, what's painful for gold is, unlike stocks, gold never had the recovery. Like, look at this. Here's, let's do a side-by-side just so we can really hammer this in. Stocks had a, let's put our screen on. Can we do, where do I want to go? Is this yeah, okay, daily chart. There we go. Okay, so what I want to show you guys is that if you look at the April, let's say March into April, look at the difference here, right? So while stocks had a remarkable recovery, there we go, we're pretty one-to-one there. While stocks had a nice recovery following the oil concerns, the sharp rise in potential inflation, stocks had a remarkable recovery and are still sitting around all-time highs. Very impressive from the stock market side of things. Look at gold. Gold had an initial attempt to recover, never recaptured anywhere near its all-time highs, and actually since then has done nothing but essentially break low after low after low. So gold has some very relative weakness to stocks. Now, of course, there's a story here that we're missing that we have to include for context. The stock market has been ripping higher on strong earnings and excitement about data center buildouts and never-ending capex spending, and we're all addicted to ChatGPT and Gemini and Claude and all those now. So the market has something, the stock market has something to kind of celebrate. Gold has nothing to celebrate, in the sense that we went from, we're going to get a bunch of rate cuts in 2026, and Fed Chair Warsh is going to be a super strong dove for the president. That was the narrative, and all of that has died, right? We are now talking about rate hikes. We are not talking about, Kevin Warsh being a dramatic dove that's going to cut rates regardless of what his peers say. It's just not there. Right? So gold has something to prove here. I'm not saying gold can't find a way to move higher. I'm saying you probably need to see the conflict subside and or inflation start to cool. If you want to talk about, and I'm not talking about just one print, I'm talking about the next few prints. I'm talking about oil prices staying under $90 a barrel. These things would potentially help gold to start climbing again. But right now, it's got a lot of things stacked against it that make it very difficult to be overwhelmingly short-term bullish. Let me clarify short-term, because long-term, I think the lower gold prices go. Personally, I like the idea of having some precious metals in my portfolio. Not financial advice. I'm just telling you my thoughts on this. So with that said, let's take an isolated view here of just what's going on with the price action of gold for a moment. Let me switch to my one chart view. So if we take a look at the daily, clearly you've got, again, momentum to the downside. We continue to be respecting the 20-period moving average in gold. We are still sitting pretty close to those lows. A little bit of a recovery move in the last day and a half. I mean, but this is what I mean. This is kind of frustrating in the sense that despite what we would argue as a picture perfect inflation read, like you could not have asked for June's numbers to come in better than this. They came in ice cold, Santa Claus polar bear cold, and yet it's not enough to break out gold right now. So I think that what that's telling you is that the market's like, okay, cool, June was great, but July is freaking out, right? Because oil prices, again, on the rise. So that is where we are watching oil prices, which are kind of squashing the fun. They're killing the party here for the gold bulls. And I think that if we're looking at gold from a technical perspective, continue to watch this downward trend line that we've been monitoring very closely on the channel. If we can get some technical breakouts here, that starts to look more attractive. And I have to say, I'm leaning a little bit more in the direction of looking for breakouts in gold, especially after what was, again, we can't discredit that these have been good inflation prints. And that does matter because, again, it seems like within the economy, we've got some resilience in keeping prices under control despite the Strait of Hormuz stuff. So I'm not necessarily opposed to the idea of, if you get some meaningful breakouts, I'd be potentially willing to maybe join the move higher. I'm personally not a big fan of trying to be the first one in when it comes to being long. I understand, like, some people really like to buy low, sell high. I am more of a fan of buy high, sell higher type of stuff. So if we can get some momentum picking up in gold, then I'm interested in watching it. I do lean slightly bullish here on gold for the time being. Let's take a look at some options volume, because I think this might be telling too. So gold, I noticed this morning. I was looking at our options flow. Look at this, guys. This is net options volume flow using the 5-day and 20-day moving average, specifically for GLD. We have massive bearish interest coming in on the gold chart. Now, this is, of course, as of yesterday, and full disclaimer, a lot of that volume is probably parked in there hedging against the CPI number, right? So there is a little bit of contention there, but on a proportional basis, this is the most bearish from a crowd sentiment perspective that we have seen on an options volume flow. Now, why I like this tool specifically, we have a bunch of different options tools within Edgefinder, but and I'm going to show you the new one that we just built. But the volume flow is nice because it gives you a actual kind of nominal, like, all right, this is not just a proportion, this is a volume calculation. We're taking call volume and we're minusing out put volume, and that's showing that on a net basis, massive bearish sentiment came in on gold in the last few days. That makes me more of a contrarian looking at the bullish side. So if I see everybody rushing the put side, that tells me that I actually like the powder keg potential of those shorts getting squeezed on a breakout. Does that make sense? So I do lean a little bit more in favor of the bullish side based on some of the technicals that we're seeing in the options data. I also want to show you guys something here on the put call wall chart here. I'm going to zoom in just a little bit on this. Let me switch my values to let's do between like 345, and we're going to go and we're going to put the upper limit at like 400 just to keep this tight. All right. So that didn't really do much, but pretend it did. What we're doing is we're looking at kind of where prices are seeing a cluster of put volume. We have the 360 level of a major support zone. We also have a lot of call and put volume up there at, what is this level? 400. Yeah, so 400 and 360 are going to be some levels that I'm just going to mark off really quick. So if we go in here and we get our, this is GLD, I'll come back to spot price in just a moment. So 400 and what do we say? We said 360, right? So these are going to be really critical levels based on the options volume that we just discussed. If we're looking at this, what we can see is that this we would mark as a major level potential support. That's the prior low. When we look at spot price, you're hovering right around prior lows. And then if you're looking at 400, that's about a, let's call it a 7.5% rally higher from here. I think that's going to be the 4,200 level. Let me just check. Yeah, it's going to be the 4,200. No, it's not. It's going to be this one. It's going to be 40. So this is kind of a ways away. The point being, the put call wall is showing us that we do have, at least right now, a huge amount of buy support around these prior lows. Depending on your time frame, etc., maybe you're watching those levels. It has been rewarding if you've been on the call or bullish side the last few weeks around those levels. Those levels have held really well. That's going to be around the 3,950 to 4,000 level in spot price. So really interesting. I am looking for, like I said, the breakout here. One more put call ratio thing to show you. Look at this. So if we switch over to, by the way, call volume going off the chain here for SPX, but let's look at gold. Look at this. What in the world are we looking at? What in the world is that? So this is the most extreme put call ratio I have ever seen on gold. Let's read it. Let's break this down. What does this mean? So high put volume, that is clearly what's happening. Massive amount of put volume. And again, this is why we look at this stuff. You can't see this stuff all the time if you're just looking at candlestick charts. Reading the options data is powerful stuff, because otherwise you just wouldn't have known this. None of us would. It's not like we saw some ungodly candle from gold yesterday that gave this away. This is in the options data. What do we see here? We see a massive proportion of, brother, WTF is that? Exactly. We have a ginormous amount of put volume that came in yesterday on a proportional basis. So we see it in the net options volume. So we know puts are going crazy on an absolute basis from a nominal perspective. But we also know on a proportional basis, there was like no interest in calls, only interest in puts. So what does this tell us? What do we use this information to actually do? Well, I'll tell you how I use it. Yeah, right. I am a millennial technically, but I'm hanging on to my Gen Z memes. Put volume went insane. Everyone seems to be bearish on gold. It makes me less interested in being bearish myself when I see the popular crowd has fully swung bearish, right? Now, it doesn't mean the gold market has to go up. It unfortunately doesn't give us a conclusive guarantee of anything. We never have guarantees in charts, by the way. But it tells me with so many people on the bearish side, if you get breakouts, I am intrigued by the bullish side. That is my opinion, not financial advice. Does not guarantee that I'm going to be right on this, but I think you are starting to see the evidence here priming for a very potentially strong breakout in gold. This data, again, is not something that I can just see on the technical price action. There's nothing here that tells me, hey, there might be a big bullish move coming. But the options data is telling me something really intriguing. Does that make sense? Guys, I'm so excited about all this stuff that we've been building in Edgefinder. We have been just cranking out options tools to help make this stuff more accessible. If you don't have Edgefinder, now is your chance to get it. And I'm going to tell you what, we're going to do something special today. If you are watching the live stream and want access to our tools, we just dropped put call wall. If you already have Edgefinder, by the way, free update. We never charge for updates. You already get access to this. It's under your crowd sentiment tools. We have loaded the boat on crowd sentiment tools recently. If you don't have access to Edgefinder, we're going to do something special during the live stream right now. We're doing 45% off. It is our biggest discount that we do all year long. If you don't have access to our tools, I'm telling you, this thing only gets better and better. And also the price only goes up over time. Our overhead costs to building, maintaining, and supporting thousands of traders using these tools gets more expensive over time. Let me tell you something. When you buy a copy of Edgefinder, this is my sales pitch. Give me a chance to earn your business. They're worth every penny. If you want to take your trading to the next level, if you want to track macro fundamentals, crowd sentiment, options data, institutional activity, this stuff is powerful stuff. And we're making it one-time price available, meaning you do not pay subscriptions. I'm sure we all have enough of those. When you buy Edgefinder, it's a one-time price. We're currently doing 45% off. And for a limited time, we are going to be doing not just the 45% off offer, but we're going to allow people to split it up into affordable payment plans, to split it up into a 3-month period, for example. If you are interested in exploring that with a member of my support staff here, I'm going to just drop a link in the live stream chat. Here it is. These upgrades are sweet. Just like, do you know, as the creator or part of the creation team behind Edgefinder, the excitement that it gives me to drop new features to our users is like when I can only imagine, because I'm not a songwriter, a like professional artist, like a musician dropping new songs to their beloved fans. Like that's how I feel, because people love our stuff. Our tools are used all over the world. When we drop new features, we get flooded with like, this feature is amazing. It like absolutely lights me up and motivates us to keep building better and better tools for you guys. So I hope you enjoy the new stuff. We've only got more stuff. We've got like just a boatload of projects piled up. So if you bought Edgefinder, you know, your one-time ticket to get access is going to be, my goal, the best money you ever spent trying to learn and as a trader. We're going to build more and more tools, and it's only a one-time fee to get access. We may change that someday, to be completely honest. I don't know. But right now, we will always guarantee that if you bought Edgefinder, right, we're not going to, as long as I'm running the ship, we're not going to, you know, make it so that you have to pay again to get access to our stuff within Edgefinder. Edgefinder is a one-time payment. You get future updates. It only gets better. We will not upsell you on you know, Edgefinder features within it. So there you go. Take advantage, chat with us using the link that's just been dropped in the chat. One more option to do that is we're going to just throw it up on the screen. You can scan the QR code if that is easier. You can chat with us on WhatsApp. You can chat with us directly on the website, set up a Zoom call. Our team is available to help you with getting access to the tools if you are interested. So there you go. So summary on CPI, PPI, cooler than expected. And that is, I think that's a very positive development for markets here in terms of gold and stocks. Like we can, at least in the short term, kind of celebrate, all right, we're probably not going to get rate hikes. Like that's good. It doesn't tell us anything about July, because July, depending on what happens with oil, could be problematic. But again, I think you want to just keep a tab open for oil for the rest of this month, because if you get this happening, all right, we're good. Like we're probably fine. Like the rate hikes are going to probably chill. We won't have to worry so much about that. It's just the challenge is if you get this happen in oil, which we know if you've been sticking around for a minute, remember how fast oil can rise. Like oil can just blow out from left field and it can double in price in a couple months. We saw that take place. We can see it again. I don't have a prediction there because I can't predict what's going to happen in the Middle East, but I can follow the trend. And if this breaks higher, guess what's going to happen to most of our charts? The trends are going to flip bearish. This is why I like the gold potential breakout, but I don't like the idea of making a huge prediction from right here that we're going to break. Like, I'm not trying to buy gold right now. This is why for me, it's a prove it story with oil. If oil falls, chills out, and we start seeing technical breaks to follow on gold, the risk reward looks really sweet, in my personal opinion, for my own trading. But before then, the trend is still down. I need to see some kind of a technical breakout. Give me something like this, and we'll move higher. Now, I also want to just fully disclose where I'm at position-wise with gold. I do have one position open on gold, kind of. It is not actually gold. It is GDX. I discussed this in my video yesterday. I have short put positions on GDX. Now, if you're unfamiliar with options, shorting puts is like, it's a bullish trade. It is a bullish leaning trade where on GDX, I sold the 68 strike price puts going out about, I think it's 37 days left right now. So I sold based, again, I looked at my indicator here, right? My put call wall. And I said, yeah, if price keeps going down, I think you're going to catch a bounce on gold. But anyways, I sold the 68 strike price puts. What that means is that I collected a premium. I collected about 1,800 bucks total for doing that. So my max profit on this is an $1,800 gain. If price stays currently where it's at, if it just goes sideways by expiration, I would collect the full amount. If this thing rallies, I could collect the full amount. The only scenario in which case I would lose money would be if I had to buy the shares at a higher price than the strike price minus the premium I collected. So long story short, it is a slightly bullish leaning. Why slightly? Well, if I'm really bullish, I would just buy the shares. I am bullish, but cautiously and really only willing down here to buy the shares. Now, isn't that kind of counter trend? Well, this is a different strategy for me. I do some option selling that is different from my momentum trading. I just want to disclaim that because I talk about all of my positions on my videos, streams, Discord, etc. So I don't want to not disclose that I do have some bullish positioning. So I'm actually perfectly fine. If gold does keep going lower, I can start a long-term bullish position, GDX, which is a gold miners ETF. So again, that is a longer-term, more position style type, position trading style of trading. It is not a 4-hour, daily chart breakout type of trading that I do, which is more exciting, to be honest. But my GDX short put position down at 68 is still active. If the price goes down there, then I'll happily buy some shares and hold on to it, maybe for multiple months. So it is a position trade. It's a little different than trading actively, XAU USD spot price breakouts. It's a different style. But I do have more than one trading strategy. One is more slow and steady, like the option selling and position swing trading. And then one is more, active and more aggressive in nature, not necessarily in position sizing. I still risk very small, but I do have kind of those two strategies or I really have a third as well, but we're getting off track here. I got the Edge Finder in 2022 worth every penny. Thank you and well done to Trader Nick and A1 Trading Team. Thank you very much for that feedback. Like I'm telling you, when we hear from customers who have enjoyed Edge Finder over the course of years, put yourself in my shoes. This is my world. I spent so many countless hours working on improving my own trading, building the tools that I wanted. My background's in software engineering. So having built tools that other people are thriving with, like it's helping them in their journey, is a very fulfilling feeling, as you might imagine. I wake up, it's one of the first things I think about every day. So if you're a customer of A1 Trading, just know I'm thinking about you right as I wake up in the morning. I hope I didn't freak someone out. They're like, you know what? Actually, I don't want the Edge Finder anymore because that was weird, Nick. You're thinking about me in the mornings. You should be thinking about your wife and family. What is wrong with you? I'm just kidding. I think about them too. Nasdaq's higher today. So again, I think that you still have this barcode. I don't know, for some of you guys, from the NQ traders out there, bro, if you want a barcode, just go to the store. Like, what is going on here? This is the ugliest Nasdaq chart I have seen. That was weird, bro. Don't worry, I can get weirder. Give me a little time. We'll get weird up in here. Did you guys see my picture of my cat yesterday? So real quick, this is the camera crew behind A1. Her name is Stella. Gosh dang. She is gorgeous. So this is a cat that lived on my porch. I promise I'll get back to price action junkie stuff in just a moment. This is my camera crew here behind the scenes. Her name is Stella. She lived on my porch for a year. Like when we bought a house, she lived on the porch, and she's an old girl, but she is gorgeous, man. Like really pretty cat. And she's old. Like I think she's like 10 years old. I guess it's not super old, but we don't know exactly how old she is. But anyways, she's camera crew behind the scenes. So everything that goes right around here is thanks to the camera crew. Cat distribution system. I'm telling you, man, that is so true. I have 3 cats now. Something, guys, see, you start telling people you got 3 cats and doing weird stuff on stream, people going to think you're weird. That's okay. I'm married. I got nothing to prove here. Insane camera crew. So facts. There's a myth. They say you don't pick your cat, they pick you. It's a real thing. If you're not a cat person, I'm telling you, I wasn't either. Once you have a cat, you really like, it's weird. It's weird how that changes. Like I was never a cat person. I thought they were mean. They're just very selective. But if they select you, it's like, dang. It's like, GG, you got me. Yeah. So anyways, Nasdaq, I think if you're watching this chart, you are stuck in limbo here. It feels like you're in the twilight zone. If you're watching, I'm just curious here while we're on the subject of our new tools here. I want to look at Qs. So QQQ is what we're going to look at really quick. This is the Nasdaq ETF. And let's narrow this in because this is too much to look at once. So what's our current price on Qs? Let's just see. We're looking at like a 7. Let's just put 725 in. 725. That'll give us our anchor, our reference point. And let's look more locally than this. So let's do like let's do 700 to, can we do like 750? Okay, 750. That's a nice even. Okay, so that's a little easier to look at. So what we're doing, the way we're going to read this chart is we have a lot of options volume at certain critical strike price levels. We have selected in our expiration. Oh, let's select our correct expiration. So we could do real short term. This is 2 days out. Yes, you look at how that kind of filtered in. Okay, so we have a lot of volume clusters down around the 710 level. So that would be a critical level of support, I would say. Critical level support around 710. Critical level of resistance around 740. Okay, so 710, 740. Let's go do our charting here. 710 and 740. Okay, so these would be kind of your walls, your call and put walls, right? So when we look at this, we say, okay, if price has a bit of a sell-off, we might expect to see some kind of a response from the bulls around that 710 level. And if you see a rally higher, this makes sense. You're talking about just shy of all-time highs. You've got major resistance. Does that make sense? So the way we would read this is that these are levels to watch. If you're a breakout trader, you'd be looking at this level to get run away to the upside, right? That is a really strong setup, and I really like that mapped out as a possible trade. On the bearish side, if you're a bear, you'd be looking at this level and saying, give me the break below here. And that's probably something I would be willing to fade into or breakout trade to the downside. Does that make sense? Hopefully that explanation, I feel like that was a good example on the Qs. Now, you might not trade QQQ, but you can take this same logic and go apply it to other places. So if I go NASDAQ, right, we're talking about, we have a lot of concentration there. And we have a lot of concentration here. Just so happens that it lines up nicely with our support levels and resistance levels. So you have major resistance overhead. We've been in chop fest land here with NAS for a minute. Also, let me just double check that let me make sure I've got live stream link here. Sorry, guys. Hold on. I got to make sure the next person has the link to join stream. We've got our next show host. Okay. Should be good. And then our next show host will arrive in just a moment. Okay. So again, looking at NAS, what it would tell you is you have critical support and resistance marked up, not just from a technical basis, but from an options market basis, right? We can see it in the open interest. There's a lot of put volume down there that would kind of act as a potential support level. And we have 740 as a huge area where a lot of calls have traded. So a lot of people, clearly, the way to read this is a lot of people are betting the Nasdaq is going to move higher. But remember, who's selling them those options? If you buy an option, someone sells it to you. Typically the seller, a lot of that volume is market makers, JP Morgan, big players. They're selling those calls and they're selling those puts and collecting the spread. Alan, I saw that, man. We talked a little bit about it earlier. Crazy. Just for reference for people who are just tuning in. Look at this put call ratio, gold. Insane. Brother, that is wild. Like, that's the most insane put call ratio I've ever seen on gold. I don't know. Like, that was just a wild move, or at least interest. This is why Alan and everyone else, like, options data is just, it is so powerful. I would argue that for me, the options data is up there, if not now more useful to me than even the commitment of traders data, which is super useful. I love getting an idea of kind of the slow moving view of what institutions are doing through our COT stuff. But I'd be lying if I said, I think that COT is awesome, but some of this option stuff is just, it's like groundbreaking to have all the, like, we can track all the orders for the market now. Like, with the right tools, you can see it. You've always been able to do this stuff, but building the right tools to make it easy to understand and see, I mean, that's what we try and specialize here at A1. So I'm pumped about it. I think options data is a major overhaul. This has been like the summer of Edgefinder options data overhaul. And we've, just been pouring in hours and hours to build this stuff. So I'm excited to have it now available to everyone. Like I said, 40% off ending soon. If you message in while the stream is live, they'll actually get you 45% off, and they can set up payment plans, etc. for you. Use that QR code. What does the put call ratio imply? So the put call ratio is we have on the page, if you have Edgefinder, should load here, hopefully. Don't make me look bad. Yeah, there it is. Okay. Put call ratio, simple measure of market sentiment. It divides the total daily put volume by the total daily call volume for a stock or index. A low ratio means more calls are being traded than puts, and vice versa. A high ratio means more puts are being traded than calls. When optimism reaches an extreme, Edgefinder gives the selected symbol a -2 bearish score, because the contrarian view expects a reversal. On the other hand, a high ratio means heavy put buying and widespread fear. So Edgefinder automatically calculates in our scoring matrix this reading as a bullish one for the selected symbol. Now, the power of Edgefinder is not just having all these tools to look at stuff, but also to have a score system that automatically factors it all in. That's the power. How much does it cost? So we have a couple different pricing options. If you would like to explore that with a member of our team, click the link. I'll drop it one more time in the chat. And then up next, we have Alan Perez taking over the stream. So I'm just going to roll this quick break. And here he comes just after this. Check it out. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edgefinder. The Edgefinder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edgefinder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Good morning, everyone. How you guys doing? Hope you guys are having a great day today. If you guys listen to that ad and if you want to make fundamentals as easy as technicals, go ahead and get yourself a copy of the Edge Finder. It is so simple. It's the lowest price of the year, I believe, and it is so much worth it. So let's go and talk about what happened. Yeah, that put to call ratio was crazy. I was talking about it on the workshop this morning with all of the workshop members, and we're going down the list of everything, new tools, and I saw the put to call ratio on gold, and I was like, holy moly, is this the signal that we're waiting for? So my thought process on gold here. I know gold is a very popular asset, and this is what I told the guys in the chat and gals. I needed a couple things for the gold story to start aligning, right? One of the things was a cooler CPI, which we got the CPI cooling yesterday. And then you also had PPI this morning as well start to cool, which is actually an added thing. What I would also like to see for the gold bullish story is for yields and oil to start taming down a little bit, right? So we're seeing yields today. If you look at the 2-year yield, we're still respecting this upward trend line here that we've been respecting since the entire duration of the war. So yields are still elevated. Don't get me wrong. However, if we start to see a breakdown in the 2-year yield below this trend line, then maybe that is the bond market positioning for not as restrictive policy as we once thought, right? The other variable to the equation would be oil prices lower. So what I've gotten from these recent prints is that we had some lower prices in June, and that actually did translate into the inflation story actually improving a little bit. So we had cooler CPI and cooler PPI. So I have these three things in mind. I have cool CPI or cool inflation. I would say I'm gonna rephrase it. Cooler inflation, a breakdown in yields, and a breakdown in oil. We only have we have two of the three variables, and I would argue that the oil variable is probably the most important one. And for that reason, I hesitate a little bit. Why? Well, if you know that oil lower was a direct input to that lower inflation reading, at the moment you have oil elevated again. And so if oil continues to be elevated, then that would just in my theory, my thought process would be is that you just walk back all the progress. And so you don't want to like ignore that variable. But it's cool to see that things are starting to line up here. You have this trend line here that we have, right? You have lower inflation reads, you have yields trading lower on the day. We'll see if we have that continuation to the downside. And then on the sentiment side of things, you have the put to call ratio, which as Nick highlighted here, my apologies, I was late. I didn't know you guys were already on that boat, but look at that, right? Very, very extreme reading there. So very interesting to see. Let's look at, I'm curious to see what COT data is too. COT data history. Let's go to gold. Where are you? There you are. Pretty consistent demand, I would say. Definitely picking up in recent terms, but consistent demand. One thing I did see that I did not like was the net options volume for gold. Bearish. But again, this is a 1-day lag, which is a pretty good one, right? It's a near real-time reading. So we'll see how this shifts. But if you start to see some net bullish options flow in gold with that very, very extreme reading in the put to call ratio, with yields lower and with continuing to see those good metrics that are pointing at maybe some US dollar weakness, then that increases the story for gold upside. I think the risks now are more in favor for gold upside than downside. Again, the only variable that would really just destroy it all is oil. If oil continues to stay elevated, it continues to trade higher. If it breaks above this level, which was once support throughout the war, and now I'm just going to mark it as resistance. If it breaks above this level, then all of the progress in terms of the inflation gets walked back, and if that happens, then yields rise again, right? So I'm looking for gold longs here. I'm just gonna be patient though. I'm gonna wait. I'm also gonna wait for the technical breakout as well. But it's good to see that you're starting to see more confluences pointed on the upside there. Good morning to all the regulars. Sluggy, how you doing? Max, Simo, it's good to see you guys here. Let's look at some stuff here. One thing I did see, which I liked, different things in the Forex world. We go to top setups page and we type in pound. You can see here that the pound basket is quite strong. Pound dollar, pound yen, pound Swiss, pound Aussie, euro pound, which is buying the pound and going short the euro, is all strong. In fact, I like a couple things. I like pound Aussie. I like pound Aussie. Again, I would rather wait for a breakout of this level. So if we get a breakout of this technical level here and we overcome that 200-day moving average and you continue to see that bullish reading on pound Aussie, I'll probably take that. I also like pound Kiwi. Steep drop off here, recent hawkishness in RBNZ. So that's causing some pressure here in the short term, but the pound basket's doing quite well. So on a relative basis, you're probably getting some relative value in pound Kiwi versus the others. You are testing on this 200-day moving average as well, and you do have this level of support here that we're in as well. So I like that from a Fibonacci perspective. You are tapping into the 38.2 and the 50% retracement level. So that's good. I would like to see kind of a reshape or a little bit of a stall, I would say, right? This is currently a falling knife. So I don't want to catch that falling knife. I would rather wait for some kind of a V-shaped recovery or whatever, unless you have a stronger score. So right now it's getting a neutral score. So if I go to this pound Kiwi is getting a neutral score. So unless that improves, then I would just, buy. But I would wait for something, either a V-shaped recovery or an improvement score in pound Kiwi for me to go ahead and continue to the upside. But this is something really, really cool on the radar that I like to see. As far as dollar softness goes, I want some more dollar softness so I can ultimately pick it up at some discount levels. Dollar CAD specifically, you did have a drop off in dollar CAD. And in fact, one thing I miss is the Canadian jobs report, which is really adding to some help. So we're having some figures pointing at some dollar bearishness, which is that inflation read, CPI, PPI, and that NFP report. On the Canadian side of things, the Canadian side, if you just ignore this recent price action, dollar CAD has been moving one directionally up, right? Canada has been struggling a little bit. But recently they had a jobs report that I found out yesterday was really good. And also, too, there's a little bit of skepticism when it comes to that jobs report. So the word on the street is that the jobs report, a lot of the figures, the added jobs were part-time jobs that were created for the World Cup. So Canada, one of the hosts of the World Cup, needed to meet the demands of the travel going inbound. And so that's a lot of people are saying that the jobs report was a little bit inflation due to that. So we'll see. You do have Bank of Canada today, like Sluggy says, that's going to be a good tell. We'll see what the forward guidance brings. If that adds some more fuel to dollar CAD to the downside, beautiful. I would just wait for it by the dip. I like this 1.3900. I also like 1.385 where that 200-day moving average is by. That's where I'm looking to go ahead and step in and buy some dollar CAD. So we'll see. But for the now, I'm a short dollar Swiss, so I'm kind of betting on this softness here. Australian dollar to the upside looks quite well as well. So if you go to the Edge Finder and we go to, let's eliminate the pound and look at everything. If you look at let's actually look at AUD. So AUD USD getting a bullish reading of 6. You can see here that we are at this level of support, also testing this 200, or we tested the 200-day moving average, and we're reacting positively to that. So maybe if you get some kind of a pullback somewhere within here, I would like to buy Aussie dollar as long as you have this level of support hold and you still have US yields lower, some dollar softness, Edge Finder score still looking good. Then I would go ahead and continue with that trade idea. Hey, Marco, how you doing, man?
Hello, doing pretty well. How are you?
Pretty good, man. The dollar bear story just got a little bit better.
Mm-hmm. Yep. With the PPI.
PPI, man, and also too, You're seeing a breakdown in yields, which they're still elevated. I'm not going to ignore that fact, but the 2-year yield, if you look at this upward trend line, it has not broken it once since. So I kind of say that this is a pretty important level in my opinion, and that if you were to get a break below and some follow through, then maybe the market's kind of going from the hawkish stance to the just stay flat stance that we've been talking about. Like we've been talking about, the probably hawkish scenario that's really happening deep down behind the scenes is just holding rates rather than hiking rates. So if we see that breakdown and continuation and that follow through, then I think that's going to be the case. Like if I'm looking at a CME Fed Watch, we're talking about this in the workshop call this morning, but in the beginning of the call, the probabilities was if you guys are here, I know you're in here. I think it was 80 something and 14%.
Okay.
This morning, and then it dropped to 9% rate hike of this month. If we reflect on Monday, it was 45%. So you're starting to see the odds shift, and they're getting deferred, pushed out. So if we continue to see that, then maybe we're right on the fact that the Fed just holds rates.
Yep. I would say things are sort of unwinding as expected. I mean, the PPI is usually connected with the CPI, so with a cooler CPI, I was expecting a cooler PPI as well. Until the next Fed meeting, there's no more inflation prints, except maybe the core PC, but I'm not exactly sure. I think there's actually no prints until the July meeting. So July meeting, I just think it kind of either stays flat or it pivots to a bit of a more dovish tone compared to the last meeting. So I think it's going to be helpful for our positioning. And then we get more prints for the September meeting. And then the question is, what about the Strait? So the blockade is apparently put in. Apparently, Iran is the only one that is isolated. But so far, it doesn't have a huge impact on oil. Oil is just sort of hasn't moved anywhere. Okay, it's moving higher a little bit, but definitely not the sort of reaction we had in March, April, May. So I would say the market is disregarding that story and mostly focusing on the actual numbers. But my main point is, if the Strait is closed again, or at least partially closed, what happens to the CPI and the PPI for the next month or for the month after that? So it becomes a bit of a question mark. But I'm gonna keep on holding my stance of a more dovish Fed, of a bearish dollar, because I think that is the most logical way to go.
Yep, I'm under this. I'm under the same thinking framework as well. Like you're having a lot of things pointing in that direction, and you have essentially the puzzle is made out, but you have the one last puzzle piece, which is oil, and I would argue that's one of the bigger important puzzle pieces, because like you mentioned, if oil stays high, then it just walks back and unwinds all of the progress that was made, and so that becomes irrelevant 2 months from now, 3 months from now, right? So I'm thinking that way as well, but I'm also thinking that no one knows what's going to happen in the Middle East geopolitically, and if you chase the headlines, you put yourself in a bad spot. So what I'm going to do is similar to you, is I'm going to focus on the data that's coming out, which is NFP miss, CPI cooler, PPI cooler, and we'll see what happens from there on. And then in the event that the unknown happens, where the Strait of Hormuz gets opened up again fully, or whatever happens that works out in a fair, so be it. And that only just adds more fuel to our idea. But until the numbers start to change, until the data changes, then I'm going to, again, just continue holding on with my thesis. And if I'm absolutely wrong and things start to flip the other way, then so be it.
Yep. Let me just check for the PPI print, or sorry, for the core PC print on the calendar here. So this week, no. Next week, no. And then we have the Fed. So no core PC before the Fed. I'm not sure when the print actually comes out. I'll look into it a bit more. But anyway, the next few prints that I'm looking at is going to be, of course, the Fed. It's going to be the NFP at the end of this month. And then what about inflation for the next month? So that's kind of the next things I'm watching. And I'm watching my yen basket. So watching to see if I can get in on some buy setups on the yen, which would probably diversify some of my risk. And I think sort of the bullish yen idea is, as I mentioned, so a lot of alpha in it, and the beta, the correlation is pretty low to the Middle East. That's why I like the idea so much. So far, it's not really working that well on Swiss yen. But if it actually commits, if it breaks lower, so let me just put it on the screen here. If we look at Swiss yen, so it's kind of bouncing off of this support level, but if we break that support, I think we could slide lower. So that's going to be my confirmation to potentially look for some sell setups. You can either put a flat support or you can put a trend line through these points. So that's basically what I'm looking at. And one sort of wild card for me is GPNZD. I'm thinking about this more and more. And
Me too, man. This morning,
like this.
I was thinking about it a lot. In the workshop call, I was thinking about it. I was hesitating. And it keeps coming back to my mind as well.
Yeah, it's pretty good. Maybe I'll take it, but with lower risk. So I don't have to do the full 1%. I can do maybe 0.5. It looks pretty good. I mean, the idea behind it is pretty solid, I would say. The thing that is against me is the edge finder. So I think the print is neutral. Let's take a look.
The pound basket as a whole, Marco, is really strong. With the only one that's not is pound Kiwi, and I think pound CAD maybe. But there's only two pairs that are neutral, so that's the only thing that keeps them back. But also the pound basket as a whole is strong, and this one could potentially offer some relative discount compared to everyone else. So that's what I like about it. You also have the 200-day moving average lined up there on your chart. It's in there. From a Fibonacci retracement standpoint, I think that's you're within the 38.2 and the 50%. So it looks good. Don't get me wrong, but I would need to see the edge finder really give me that score. Even if it means I don't buy the absolute dip and I just get on the V-shaped recovery, that's fine.
Yep. So the things against us are the edge finder and well, if you're looking at the basket, then the edge finder is bullish, but I would love to get a bullish print on this particular currency pair. And the second one is, of course, the momentum. I mean, the momentum is pretty bearish on here on this chart, but that's the main idea behind the trade. A massively oversold chart that fundamentally should really be going higher because the pound has caught a bid recently. I think it's going to continue being propped up, being bullish. So yeah, what would sort of make you want to take this? Because I'm like 70-80% sure I'll take it today as a buy position.
Yeah, my only thing is it's a falling knife right now, so I don't want to catch a falling knife.
Yeah,
so I would wait for. Let me show you what it looks like on my chart.
Yeah, let me bring your
all
chart.
All it is just a support zone. So I still have the 200-day, but it's kind of what I'm looking at here. A falling knife. I would like to see a bounce here or something like that. Either I see the bounce and I see price stall out, or I see edge finder score start to sway in that direction. Yeah. Another thing is like if you continue to see, which the way we're positioned now is Kiwi dollar, or I'm sorry, dollar softness, then Kiwi dollar continues to blow it out of the park, right? And maybe that adds more fuel to the Kiwi dollar hawkishness that we saw. So we saw some Kiwi dollar hawkishness, but it was walked back and some because the dollar strength. But if you get that dollar strength taken out of the picture, then there's also a case where Kiwi dollar continues to rally. I mean, for a couple of days now, Marco, I've been looking at currency strength index. The Aussie and Kiwi have been on top for the past like 2 or 3 days. So they're clearly up there. So that's what gives me that hesitation. But it's just more so like two strong currencies, I would say. Pound basket is strong. Maybe Kiwi dollar basket is strong as well. But maybe I also play for a mean reversion, right? Maybe I just try to, instead of targeting the upper end of this range, I just try to target somewhere right here in the midpoint. That could also be a play. And just try to play the pullback in the event that this continues to drop even more. Well, I just play the pullback, and then when the opportunity for bears to step in at key levels, like let's put myself in the position of a bear. If I'm bearish on this chart and I'm on this level of support here, I would wait for a pullback into here, like this, Oops. You get the point, right? So maybe then the case would be you buy here, and then you look for exit opportunities somewhere within here, right? That way
Yep.
you're capturing the pullback, but in the event that this is a true bearish trend, then you get out when bears step in. So that's kind of how I think about it. But yeah, I like the trade too, man. I'm looking at it. I'm definitely looking at it.
I'm thinking of a buy limit at 2.31, let's say. So if the price crosses that level, that it takes me in. That's kind of how I'm seeing it. Or just setting an alert and seeing if that sort of breaks, and then doing a market order. But out of all of my Forex stuff, I like buying the yen, and I like, of course, selling the dollar, and I like GPNZD. That's
about
kind
gold?
of my top three. Gold?
Yeah, what are your thoughts on gold?
So gold should catch a bid. I mean, according to my thinking, with the dovish Fed, with the lower inflation, it should fundamentally catch a bid, but it doesn't seem to be strong as far as price action goes. So it's in the triangle. It's tightening up. I think this triangle is a bearish pattern. Usually these patterns kind of coil and break lower. If we actually break up, I'm gonna wait for the 200 to buy. So if we get a break of the triangle to the upside and a break of the 200, I think it could be a good buy position. At the moment, not really super interesting to me. And what about the put to call ratio? So extremely high put volume. So that's actually a contrarian signal, I believe, right?
Yeah. That's what I was going to show you right now.
Okay.
It is extreme on gold. Like you have this
Yeah,
extreme reading on put to call ratio on gold. You have this level of support that's holding up quite nicely.
It's not
I
bad,
think,
man.
yeah, man. You're having the technicals line up. You're having the sentiment line up, like put to call ratio. And then you also have, some dollar softness. But again, the only variable is oil. But that is a pretty strong reading in put to call. Not gonna lie.
Yep. You know what? I may just take it so I can make
YOLO?
videos about it, because because if I'm in a trade and if I make videos about it, it's gonna do pretty well. No, I'm just joking, but I'll take it if it fits the plan, and it actually looks pretty good. The silver kind of looks okay as well. So maybe taking a stab with lower risk, not the full 1%, maybe 0.5 as a initial probe, and then getting in more if we break up in the triangle, and if we break the 200, of course, then it's game on. Yeah, it looks pretty good. Thanks for pointing that. Actually, not a bad idea. I'll put it on my list.
I wonder what I think retail sentiment is probably super bullish too, I would imagine, but where is it? I can't see it. Right here. No, they're super bearish. They're 100% bearish.
So retail is extremely bearish.
Yeah. Unless this is broken. But it is, 100%. It's crazy.
Do we have that the new feature? Yeah, the call and put walls. Do we have that for gold?
I think it has to be, right?
I think so.
GLD.
Okay. So essentially a big support level. No, sorry, a big resistance level at 361. 349. Yeah, 349 is a big resistance level. I would say a lot of sell orders are there, if I'm not mistaken, and a good buy level seems to be 400, which makes sense because it's a big round number. So that does make a lot of sense. Essentially, for the viewers, this shows you the support and resistance levels, but with actual orders. So it's not like voodoo magic like you see on charts. You actually can see real orders through the call and put walls. And this is what a lot of professional traders use to try and get a perfect entry. So essentially, you would not want to place your buy position below a big buy order, and vice versa. You want to front run the huge orders. You want to buy before the big whales, and you want to sell before the big whales sell. So that's how it works. And usually you'll find round numbers or big orders around round numbers. So 4K, big blue line. 350 or 3,500, big sell line right there. Am I looking at this wrong?
Look, let me show you this too. Depending on how you want to look at this, but net options flow is super bearish. So whether you look at this as you get super swayed into this in this direction here, and it starts to tilt, and you take that as a contrarian, it's up to you. But this is crazy. And if you look at the dollar, so this is kind of my dilemma. Like, I'm being honest here. You're kind of picking and choosing. Dollar is super bearish. Now there's an event where you get continued bearishness like this, where you had for a period of time you have some dollar bearishness, but then you also have the risk of it being a contrarian signal. I'm personally looking at it not like a contrarian signal, and I'm looking at this in combination with the put to call ratio to really see if it's true contrarian. But for example, with gold, what I would say is if you see positive net options flow, like if you see a move from here to here, then I'm like, okay, cool. We're net bullish. You know, this to me, this is like my COT data, but less lagging, right?
Yep.
We're net bullish, and if you still see that put to call ratio swayed like that, I mean that's good news to me.
I would say that's your game plan for buying.
I would say so, man. I mean, look, define risk in the event that the Middle East stuff just doesn't go away and it escalates. But if I'm looking at this longer term, if you have the readings pointing in positive direction, yields, like if you get that breakdown in the 2-year yield, for example, which it's reacting to this trend line. Again, I say this, it has never once broken this trend line. If you see a breakdown in yields, softer dollar, CPI print lower, PPI print lower, like we've just seen, like if you see that direction forming and you have everything in line but that one variable, which is oil, I think that's a defined risk opportunity, especially if you're still in the lower end of this channel right here. Like you're still relatively very cheap.
Yep.
And then you have so much upside. You have so much upside potential in the event that the Strait of Hormuz stuff resolves itself. If that blanket is lifted, then everything else just gets amplified, in my opinion.
That's actually pretty good. Okay, I'm gonna look into it after my segment. But what about Bitcoin and crypto in general? Bitcoin, Ethereum. I think Ethereum looks even better. So starting to wake up a bit. The story that we're expecting is beneficial for crypto. So essentially, crypto super high risk, which means it goes in the basket as stocks, similar basket, which means risk on, which means lower rates, low inflation. That's what benefits crypto. But yeah, it's starting to bounce. So looks like the Saylor drama or the MicroStrategy drama was right at the bottom, and then we started to push up a little bit. So do you think this is a path to recovery? Do you think the theme that we are expecting is going to enable Bitcoin or Ethereum to go to some more key levels? Maybe Bitcoin goes all the way to I don't know, maybe 90, 100K?
Me personally, man, I could care less about crypto.
Okay.
Like, I really don't know. Like, I really don't know. Like the benefit of it doing anything. Like it's been getting crushed. There's really no effect. Like usually an asset class has an effect on something. If bonds get crushed, there's an effect elsewhere. It's important. If the dollar gets super strong, there's an effect on that, right? Like if whatever. But with crypto, it's like it can do whatever. It really doesn't affect much. I think this is more like a luxury asset that you just play with. I don't know. I don't know if I'm being insensitive to it, but
that's totally fine. And to be honest, it's my least favorite thing to trade because my success rate hasn't been too great all the way from 2018 when I bought the top, basically. So from that point on, all of my investments and trades haven't really done well. But I'm open to trading it if we break some key levels. I would love to see a 200 EMA break. I think that's the first hurdle to go through. And one thing that's pretty cool as well, if you're on Twitter, you would notice that the algorithm has changed a little bit, and this new algorithm is pushing crypto sort of back on the forefront. So that's kind of helping because it's creating more interest around crypto. I noticed that because I follow some crypto guys, and they were mentioning how the algo is pushing more and more crypto stuff to the main page. So Bitcoin to zero, well, could be tradable as well if you want to sell. So I mean, we just need to see it move up or down. Sideways is the worst case. If it goes to zero, you can make money on it. Well, I mean, depending on the exchange. So
I would say that although I said all that, my success rate with crypto is 100%. That's because I've never lost money and because I've never touched it. So,
well, your stats are better than mine. So
we'll see. Though I really don't have an outlook. I think that at one point it was treated like as a retirement ticket, and like that kind of like euphoria kind of went away. So then it's like that euphoria is gone. What is the actual real tangible value here, and price that in? And I think that you're just seeing that the price is lower across the board because what is the tangible value? Like you had the security aspect of it, but then you have these crypto wallets that are getting stolen all the time. So I don't know.
So what's your best chart for the day? What would you say is the best one for you?
I'm gonna look at the 2-year yield.
Okay.
I'm gonna see if it really starts to break down and if there's follow through with that, and if there is, that'll translate into opportunities elsewhere. It'll either translate into dollar softness. Maybe I can go along the Aussie, maybe along the pound if I get a pullback or whatever. My dollar Swiss continues to work out. Maybe that could entice me to go into gold. A lot of things, but like this chart right here will answer questions elsewhere.
How's your dollar Swiss doing? That should be working okay.
Nah, man, it's still hanging out here.
Oh, okay. Yeah.
But we'll see.
Yeah, we'll see. So I saw something about task forces.
Yeah, we need some more task forces that'll really help us out here.
That'll solve inflation.
That will solve inflation. Yeah. No more forward guidance, but that Waller comment really moved the market. That was forward guidance to me.
Oh, that's such bull crap. Like you had Waller doing a lot of forward guidance on Monday or Tuesday, and then you also had Warsh saying something like that the CPI lower print is not really it does not really mean that huge progress has been made. If that's not forward guidance, I don't know what is. So
hey man, I say that Waller is the real Fed chair. The market moved more on Waller than they did for Warsh.
Yeah, Waller is the OG. So Warsh still needs to put out some announcements out there, move the markets a bit, so to establish credibility. But like, there's gonna be forward guidance. There's gonna be forward guidance because those guys are human just as us. They want to be in the news. They want to be in the headlines. So they're gonna say some stuff. It's always like that.
But all right, man, I'm gonna go ahead and pivot out here. I extended my stay into your segment, so my apologies on that.
No worries, it was fun.
We'll talk tomorrow, and we'll see. We'll see. Hopefully, the yields continue a breakdown, and if so, that only gives me another tick box on the gold long story. So I'll be watching that one.
Yep. I'm with you there. So this was very fun, and we will see each other tomorrow.
All right, man. Take it easy. Bye-bye.
You too. Goodbye. Let's continue. I do want to mention the sponsor of today's video, which is going to be, just give me 1 second to open it up. It's going to be Ola Prime, but they're doing a giveaway, which I want to show you. So give me 1 second. Let's go to visit site. Okay. Okay, I'm having some trouble here. Here it is. Let's transfer this here. Let's make this a bit smaller. Discord on the side. Sorry for being unprepared, but I think we'll be able to do it now. Okay, so it's basically 2 tickets to the World Cup final that is going to be in New Jersey. Okay, so plus a round trip flights and hotel accommodations for 2. The way to enter is you purchase any challenge of 5K or above using the link in the description, and every 5K account, or 5K plus account purchase earns you more entries. Okay, so larger accounts give you more entries. The 5K accounts stack on top of each other. So if you wanna win these 2 tickets, you need to go to the description of the stream. You need to go to the Ola Prime website. You need to use the code A1Live, which gets you 35% off any Ola Prime challenge. Okay, and then you'll get entered into that giveaway. Just putting the giveaway on the side, Ola Prime, great Trustpilot. They have, I think, 4.5 out of 5, which in this niche is really good. They have around 2.6K reviews. They don't have a consistency rule, which is really important if you're a swing trader. If you didn't know, so a consistency rule with prop firms means that you can't have a huge winning day. So if you make, let's say, 200, 900, 100, minus 300, and then plus 450, and you have a consistency rule with most prop firms, you're not going to be eligible for a payout because you have a huge winning day here. So you need all of your winning days to be and losing days to be in similar size. But with Ola Prime, there's no rule such as the consistency rule, depending on the account type, which for swing traders is a must. So the main point of swing trading is to hold the winners as long as you can. So cut the losses, but hold the winners. Like most swing traders, their win rate is 30%, something like that. And that's because the win rate doesn't really matter. What matters is those huge winners. That's what makes your profit. And if you read Market Wizards, you would know the quote. So 90% of profits usually come from 10% of trades. That's completely true. Like in a year of trading, you will most likely have that 2-week period, maybe split up here and there, but it's going to be usually 1 or 2 weeks of trading where you make most of your percentage, where the markets are super active. And then the rest of the months, rest of the weeks are flat, break even, small winners, small losses. That's how the game works. It's tough. It's hard, but that's how it is. If you want to participate in the game, you got to respect the rules. So Sluggy says, Marco, what if you miss one of the 10% trades? It happens, and you're not going to be able to catch them all. So if you miss one, it's not a problem. If you miss 2, could be a problem. If you miss 3, then you could be in serious trouble. So don't miss too many of them. You gotta execute the plan and take all of those trades. Well, it does depend on the strategy as well, because with some strategies the win rate is around 50%, but your average reward to risk is 1.5 to 1. And with stock trading, for example, what I'm doing here, so I have GH, I have Best Buy, which is crushing it. I have Crocs, which I don't wear Crocs, but seems like a pretty good breakout here. RXO seems to be close to my stop loss. Datadog seems to be not breaking out. I was looking for a breakout on this one, but it's not happening. Anyway, this strategy, just an example. What this strategy is about is a super low win rate, but winners, they can go 8 to 1, 10 to 1, 15 to 1. Huge winners, basically. So you take small losses, you take maybe 5, 6, 7 small losses, and then you get one winner that basically brings you to 0 and then makes you profit as well. So win rate doesn't really matter much in swing trading and in actual trend following. That's why you should kind of ignore that. How is Croc a technology stock? Is it a technology stock? Considered a technology stock? No. So if we go to Crocs, if we go to this indicator here, you'll notice it's footwear. So apparel, footwear. Okay. Technology stocks right now are super popular, but it doesn't mean that I'm only buying technology stocks. It's only about technical analysis, to be honest. So just move up, consolidation, breakout higher. But the key requirement is for the SPY. So the SPY needs to be above all of these EMAs. The SPY needs to be above the 50, the 20, the 10, and all of the EMAs need to be curving up. So this is not good if they're curving down. This period was awesome. From March, this was amazing. This was crap in this period. the strategy didn't work. This was amazing. This was crap. Okay, so you need to apply the strategy in the right market condition. Anyway, Marco, no, not the 6-7. I had to do it. But that's about it for my segment. Thank you very much for watching. You have James coming on in 30 seconds. I want to remind you, All Prime, if you want to participate in the giveaway, code is A1Live. Gets you 35% off. Check them out. Pretty good prop firm. And I will see you tomorrow. So that's it. Thank you. See you.
Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Hello, ladies and gentlemen. How is everyone doing? Hope you're all well. What day is it? Wednesday. Happy Wednesday, ladies and gentlemen. Sorry, I just need to type a message real quick. There we go. All good to go. Let me open the chat. Simo, good to see you, my friend. Hope you're well. So, what's going on today? Not too much. I wasn't here yesterday. I do apologize for anyone that does enjoy seeing my segments. I had to take care of some things, last minute notice, but I'm here today. So we did have, what was it? Inflation data yesterday. Pretty big misses across the board for the US. Really, really not good for dollar bulls. However, there is a few nuances and caveats. I'm not going to go into them. I watched Nick's video yesterday. Pretty good catch up, and he said something that was quite interesting about oil prices, and it might not be sustained lower inflation, maybe just one time lower print, which I can get behind. I think that's a very reasonable thing. I watch a couple of other macro channels and things on a sort of day-to-day or week-to-week basis, and it seems to be quite a common consensus, really, that inflation actually isn't necessarily now going to be starting a cooling path or a cooling trend. But obviously, lower oil prices over the past couple of weeks have benefited, or been a benefit, sorry. Anyway, let's continue. Let's get into the markets. There is nothing, absolutely nothing of interest that I've got to tell you about today. I've got no open positions. I was long oil, got stopped at break even. The Dow position I was in ended in a loss. About negative 0.8, and the gold trade that we had open, this is quite annoying. I wasn't in the position because I was stopped at break even, but we did manage to get out for about 1% profit just down here. So that's it. I ended up closing gold because I'm actually starting to turn a little bit more bullish, which we can go through shortly. But yeah, overall, I've got nothing on my watch list, no open positions, completely blank slate, which is really nice. It's quite a good feeling to be completely fresh in the markets with some new interesting opportunities. James, don't you think the euro dollar short idea is dead? Yes, I do. That's why I've got nothing on there. I think maybe there is potential, but for me to be interested in going long on the dollar again, I would need to see something change. I know that's a very broad statement, but what I mean by that is I would need to see the labor market start to pick up again. I'd need to see PMIs picking up. I'd need to see inflation heating up again. So, the dollar, we've been watching this quite closely on my segments. This was 100% not that long ago. So it was before we had the NFP print. So I'd say sort of the end of June. So it's been about 15 days, the end of June. The US was getting a 100% bullish score, which you can't really get higher than that. So it was kind of as bullish as it could go, obviously on a Edge Finder percentage reading. Since that point, we've had lower or worse labor data, cooler inflation, worse PMIs, and this is now dropped over 50% in score. So in terms of actually buying the dollar, there is no reason for me to do that. I have no fundamental backing behind buying the US at the moment. So as I was saying, the only way I could warrant going long is if we saw next month's NFP pick up, we saw inflation heating back up, or we saw PMIs coming back. I need to see something. I need to see a resurgence in dollar strength, which it just isn't there right now. So that also actually relates back into the gold thing I was talking about, flipping a little bit more bullish. And I'm not actually in a long position, but I am getting ready to. And I quite like where gold is right now. So something that I like to pay attention to on the Edge Finder is the score over time. So we can see gold has been pressured for months. Actually, this only goes back to June, which isn't that long ago, but still, gold has been significantly pressured basically since the end of July, mid-February, when we had the initial sort of 30% crash, and then obviously the Iran situation as well. So gold's been extremely poor. However, what we've seen is gold's now starting to flip bullish. So we've dropped off this bearish score quite gradually, which is nice to see. It means it's a bit more sustained, not just a one-time print. And yeah, again, it's coming back into this bullish territory. So I think there is room for gold to start having a little bit of correction. Obviously, we do still have the Iran situation. It is a bit of a headwind for gold. It's not beneficial by any means. However, what is interesting on a technical side is this 4,000 key level that's been respected for quite some time, and this daily and weekly level of support that's been coming into play. So I think there is definitely an argument to be a buyer of gold. One of the other arguments I've had is that a lot of retail are looking at gold on the H1, the H4, and the daily, which is completely fine. But on those timeframes, it does look very bearish. The daily here is flipped bearish. The H4 looks detrimental. The H1's horrible. But then if you zoom out to the weekly, in my opinion, this actually looks really nice to be a buyer. Now, of course, this is only one time frame. It doesn't mean I am going to buy due to this, but it's just one of those little things that I like to pay attention to. After a multi-year rally on gold, this to me actually looks more like a very healthy pullback and a bit of a mean reversion, as opposed to, oh no, I need to sell gold. So again, we've got this weekly level. We've had a really nice rally over the past couple of years. And we pulled back. We've not broken below the weekly 100 moving average even. So I do think, again, based on purely technicals, some upside here does make some sense. But I wouldn't say the fundamentals are 100% indicating that just yet. As we looked at, the Edge Finder is only, what was it, 2 or 3? So yeah, nothing significant, but I think a lot of the downside pressure is kind of done and largely priced in as well. BOC came at 2.25 as expected. Yes. Pound CAD. Yes, I actually quite like the pound at the moment, actually. So yeah, pound Canadian. One of the ones I'm watching, I literally put a video out about 30 seconds before I came on the stream about Euro pound, looking into the data for that. Euro pound is looking really good to the short side. The problem is I think I might have missed it. I really wanted to see a pullback into this. Oh, that's a bit too big. But a pullback into this previous support level, and that would give me, the break, look for a retest and then continuation. But we're just not seeing it. We're not seeing that whatsoever. So either I've completely missed the trade, or maybe I'm going to have to sort of look for a different entry opportunity later down the line. But yeah, I think the pound definitely has some short-term relative strength. Again, I wouldn't want to hold it for a long period of time. I don't like the pound by any means, but I'm not going to pass up an opportunity when it's there. Bank of Canada came out surprisingly dovish. BOC MPR assumes price of Brent will decline to around $70 by the end of 2027. Yeah, I don't think anyone. Well, actually, no, that's not true. I think the price of oil is really it's quite a big question mark at the moment. I think there are arguments for it to come back down towards 70 and even 60, which I think is reasonable. But then there's also arguments for it to actually really pick back up and start heading towards 120. And the reason is because we had, how do I explain this quickly and easily? So we had obviously the initial spark up with Iran. And we had to go to reserves, our oil reserves globally. They were really depleting very quickly. I think it got to actually quite a concerning point. And then obviously we backed off, or I'm saying the US backed off. And we got a partial reopening of the Strait of Hormuz, but now that's obviously come back. You know, we had the re-escalation. There's not been time for the oil reserves to refill. So I think there is an argument actually that inflation and the price of oil could drastically increase over the coming months, which I'm not, you know, when I say, you know, I like economics, but I'm not massively knowledgeable on that side of oil forecasting. You know, that's just not my specialty. But from what I've heard, what I've read, it makes a lot of sense. So I think the argument for actually oil continuing higher maybe is the best way to go. But I'm not doing anything with that. I was in a long position on oil. As I said, I got stopped at break even. That was my attempt. I'm not really looking to do anything else. Since when did anyone say wash was going to be a dove? The idea of wash being a dove came out when we were getting the crossover between Trump, Powell, and Wash. So do you remember when we had Trump sort of first coming in, reiterating that he wants lower rates, lower rates, lower rates? And then we were looking at who is going to replace Powell, and it was, you know, looking more and more likely it was going to be Wash, and there was speculation of whether it was going to be Wash because he would do what Trump wanted. That wasn't it's not a factual thing of, you know, Wash or Trump said, you know, I am going to cut rates, but that was something the markets and analysts were sort of thinking and speculating on. But we did hear Wash come out, was it yesterday, and say that he's got no political incentive or he's not going to let politics decide rates, which is basically what Powell said, so it's cool. Anything on the Nikkei? Seems to have lost steam. It does, yes. The Nikkei is very flat right now. I don't think we've got anything. Actually, let's just double check. See what the edge finder is saying. I can't vote. Is it JPN? No, it's Nikkei, isn't it? Yeah, Nikkei. So it's -2, actually. So we have a completely neutral. I'm not sure if that's a bug. That looks like a bit of a UI glitch. Let me just refresh and double check. What do BOC know about future price of oil? Well, oil is a big part of their economy, so I'd hope they know at least a little bit. So jobs market is neutral. However, there is no data here. So either it is completely neutral or I'm getting a UI bug. But either way, it doesn't, you know, the score is still -2. So we've got inflation bias is very bearish. Economic growth is neutral. Inflation is neutral. Technicals are bearish and crowd sentiment is bullish. But overall, there is no dominant factor here, especially on the bullish side. There really isn't anything to go from there. So on a technical note on the Nikkei, what's interesting, I can't get words out. I've been watching this level because I wanted to see a break, retest, and continuation, which we've just not had. Every time we've come up to this level in recent history, it's just been used as a resistance. So with the edge finder score, the fact that we've actually not really got a trend going on at the moment, and again, we are seeing this used as resistance, I think the best argument or the best idea here is really to stay out. I wouldn't want to go short. I don't really see an argument for being short, but I also don't really see a reason to be long right now. I think what might be a better approach, and this isn't financial advice, of course, but something kind of like what we saw over here, where we're not necessarily in a crumbling situation where we're looking for a crash, but just a decent pullback towards, you know, maybe the 100 or the 200 daily moving averages, and then look to buy a little bit lower. I think that's what I would go for right now, but we'll see. Again, I'd have to wait for the edge finder to do something in terms of its reading until I can really make a decisive move. Trump's opened his mouth again. Has he? Let me see. Hold on, I need to get my news feed open. Do you mean right now or do you mean today? I don't see anything. I just see the Bank of Canada. US forces have redacted 2 vessels since Iran blockade started. No, I've seen nothing from Trump. I'm going to assume you mean previously, not right now. My YouTube channel has just been dropped in chat. I know it's actually been a bit of a flat segment for me. I know we've kind of just been yapping, yapping about things rather than proper analysis like we normally would. But if you are enjoying my content, I would appreciate a subscribe. It's crazy. I gained like 100 subscribers in the past 72 hours. It's nuts. My videos have been doing really well, so I appreciate all the support if you guys do watch my videos. But I'm trying to get to 5,000 subscribers by the end of the year, and I'm on actually a very good track to do that. So if you could help me out, I would appreciate it. He said he just said Iran wants a deal, did he? I must have missed that. I'll take a look after the stream. So I don't know. I mean, not last I heard, but something I heard and saw come through the wire was that Trump didn't want a deal. So yeah, we'll see. But yeah, what can we do? So what was I saying? So Euro Pound is interesting, but there is no trade entry for me at the moment. Alan, nice videos lately. Thank you very much, Alan. I appreciate that. So yeah, no entry on Euro Pound at the moment, but I really like it. So I'm just waiting for some sort of pullback, ideally on the H4. But again, I'll just have to keep an eye out. On the Australian dollar, there's not too much. I think the Canadian dollar has been doing all right. But again, it's just not something I'm that interested in trading into or trying to hold. But CAD yen might have something here, actually. Fib from low to high. Actually, there is a really nice technical setup here. Let's just see if CAD yen's on the edge finder. I'm not sure if it is. I've been a bit disconnected from the markets the past 2 days. Today, I've been working on some other projects, and yesterday, obviously, I was away from the charts. CAD yen, very bullish with 10. Ladies and gentlemen, this might actually be the next trade that I'm going to take. We'll see how it goes, but CAD yen, technical setup here. We've got the fib. Actually, I need to just slightly change that. There we go. Fib from the low to the high. Fib zone here, the 50% and 61.8% line up really nice with previous structure. We've just sort of started this bullish trend, ending this bearish trend we've been in with the moving averages. So I would love to see a pullback into this zone, this previous structure and fib, and then a continuation high. We've also got the RSI that's a little bit overbought here that could signal we're in for a bit of a pullback, which obviously could drive this move lower. So CAD yen, absolutely, I actually really like this trade idea. So I'm going to set an alert actually right here. There we go. So I can get notified because I've got a really bad habit of going over trade ideas on these streams, and I'll find something that I quite like, and I'll just leave. I'll completely forget about it when I'm done with the stream, and it's really annoying because I'll come back and something will have happened, and I'm like, I should have paid more attention or set an alert or something. Inflation is not over the war. Until the war is over. Yes, I think that is a large consensus we're seeing. I don't think there's that many people that are now expecting inflation to completely cool. That wouldn't make much sense in my opinion. Shorted SMH. Why would someone do that? I mean, actually, no, I kind of get it, but I think it's a little bit of a, what's the right word here? I need to be careful. Risky, I think, is the right way of saying that. I agree that I do think we are going to see downside at some points, like some pretty large pullback, whether it's 25-30% within especially the US stock market. When that will happen, though, I don't know, because I don't want to be in a position where, for the next 2 years, I'm saying, I think the S&P and the Nasdaq are going to have a 25-30% drop. And eventually they happen. And I'm like, I told you so. But for that whole 2 years, it was actually going to the upside. Does that make sense? So I need to be really careful when I'm talking about these things. But as far as I'm concerned, the thesis is still there. Overvaluations, AI, burning money, extremely overbought technical side as well. So it is something I'm paying attention to, but I'm not willing to go short anytime soon. I would need to see something break first, and that would trigger me in. Low probability, and Nikkei is essentially perma bullish. Yeah, the Nikkei is one of those markets where it's really nice to be a buyer, but it is very violent. So it's quite an unforgiving market. It's kind of similar to gold in a way, where you can catch absolutely phenomenal trends, but if you're on the wrong side, you're very likely to just get stopped out. It's a very unforgiving market because the swings are quite large. But yeah, generally speaking, it does only go to the upside. It's like the S&P. You hold long enough, statistically, you'll be in profit eventually. Of course, again, not financial advice. Don't ever do that. So yeah, euro dollar and dollar pairs generally not really doing anything. The dollar itself did see a little bit of a correction, but it's still pressure to the downside. Again, as I said earlier, I've got no interest in being a buyer of the dollar at the moment. I just don't really see much what's the word? I just don't see much support for it. And I don't mean technical support, I mean fundamental support. I think the only real argument I could make at the moment is sort of the war in Iran, safe haven premium or war premium, safe haven bid. But generally speaking, I'm not going to try and trade that. As a holder of the Nikkei, I can tell you it won't like more escalation. Absolutely, it will not. Yeah. What else do we have? So yeah, gold and silver. We did already cover gold, but I think long term is kind of the best way to think about gold at the moment. So it might be at a position or at a point where a DCA long approach might be a little bit more valid. And again, I want to be very careful with this. It's not financial advice. But looking for longs at around 4,000 and below could be very fruitful. It could also be detrimental. Again, if you don't have the bankroll to manage that risk, you don't want to be buying gold at 4,000 and 3,900, 3,800. If you've got a $500 account, you're going to blow it very, very quickly. But if you've got, tens of thousands, hundreds of thousands, even millions, I think it would be quite a profitable approach over a long period of time. Looking for maybe 5,000 to come back into play. I think 5,000 is a pretty easy target for gold to get to once the environment is a lot more aligned to what gold likes. But yeah, we'll see, because again, we could see it head lower in the meantime. Nikkei is such a growth hack. I don't know what's going to happen when Japan starts hiking rates. Yeah, likely we'll see a bit of a rough period through the Nikkei when that happens. To DCA gold effectively and make it profitable venture, you need major dollars. Yes, you do. It's definitely not for the lower capital traders. Even attempting it is going to lead very likely to huge losses. So yeah, please stay away from doing that on gold, generally speaking. Walsh is testifying right now. Is he? Actually, just while I'm thinking about it, I need to just check my time here. I've got just under 10 minutes and I've got Tiger coming to take over. I think, I'm not sure actually, is... Oh, no. Okay, cool. Yeah, so Fed Chairman Walsh presents semi-annual monetary policy report before Senate Banking Committee. Okay, interesting. Yeah, I'll keep an eye on that then. Did he say anything about hiking rates? Not as far as I can see just yet. I don't think we are going to get rate hikes. In fact, actually, what we can do is take a very quick look at the Fed Watch tool. So we're in July. How has this changed? Again, I've not really been... It's actually, to be fair, only increased a little bit. So previously we were at, a month ago, a 93.2% probability of a rate hold. This is for the July meeting, by the way. Then it decreased to 69. Then it increased to 84, and now it's 87. So it seems like the markets are leaning back towards a hold, or a leaning majority towards a hold for July again. September, what are we looking at here? Still sort of 50-50 between hold and hike by 25 basis points. So 46.9% probability for a hold, and then a 47.4%. Did I say that right? 47.4% probability of a hike as well. So kind of 50-50 in September. So we'll see what happens. I think it largely depends on, further data. What will next month's NFP have in store for us, and unemployment data, and so on and so on. So obviously, as traders, we need to keep an eye on that anyway. But it will be very telling for us going forwards of what we can expect from the Fed. Dude, I'm in 2. It's been 20 days in profit, back to break even. I'm sick of it. What, the Nikkei or gold? Let's just take another quick look at the Nikkei. Yeah, so it's a little bit unfortunate to say, but I don't see really anything here whatsoever to warrant being long. I understand the idea, and it's, again, very similar to the Nasdaq and the S&P. You buy because it has that general drift to the upside. But right now, that's more of an investor's approach, to be perfectly honest. I think right now there isn't really anything to warrant short-term speculative positions to the long side, and to be honest, even to the short side as well. But that's just my point of view. That's the way I trade. Dollar yen seems to be really stuck at this 162, 162.5 sort of area here. So it might be a case with dollar yen, kind of what we were talking about back over here, where the market participants in dollar yen are a little bit hesitant to push this market any higher due to the risk of an intervention. So it's, again, the same idea as what we spoke about. It's like, do you want to buy dollar yen here at 162.2 with the pretty high risk of an intervention and taking a loss? Or would you rather actually just wait a little bit for if and when that intervention does happen, actually just buy it, down at 158, for example? Could be quite an interesting thing. And that's kind of what I'm waiting for. I've got no interest in buying or selling dollar yen at the moment. I would rather, again, wait for that intervention and look to buy lower. I just think it's far too risky at the moment to do anything with dollar yen. I think it's very much 50-50. Are we going to get an intervention? Are we not? If we don't, are we going to stay sideways? We'll see. Any top setups? Yes, there is actually quite a lot going on today. So we've got CAD yen, pound dollar's bullish, which is nice to see. Pound yen, pound Aussie. I'm not going to read all of them off. You can see by yourself. But yes, there are some good readings that we're seeing. By history, we already know that BOJ/MOF has used weaker dollar on CPI to do yen intervention. Yeah. So we'll see what happens. You've asked top setups again. I'm going to assume you didn't see what I've got on screen here, but yes, there are top setups. Pound yen. That was something I've been paying attention to, but I just keep missing my entries, and it's really frustrating to deal with because it's just continuing to run higher. So previously I was looking to get in down here, didn't manage to do it. It was my own problem. So yeah, I can't do anything. It's one of those, I don't like to look at it because all I see here is missing out. You know what I mean? I was looking to buy down here and I've just completely fumbled the bag. So it's a little bit of a painful one to watch when it rallies to the upside, but it is still there on my to buy list when we get the next pullback. Excuse me. Bitcoin's continuing sideways. There is no direction here whatsoever. A little bit of a hope for Bitcoin traders is this weekly level of support around 62,000 or 60,000 actually is still being held quite well. So maybe there is an idea of being a buyer on Bitcoin, but as I always say, I don't trade Bitcoin, so I know very little about it on more of a micro scale. But from higher timeframes, it does still look quite appealing to be a buyer from here. So maybe that's something to consider. If we do get, the dollar's really starting to break down, I think Bitcoin could be a pretty good long position. We're in the same boat. You missed 5 entries. You missed 5 entries as well. Unfortunate, Simon. Yeah, it's sad. I mean, it's part of the job, of course, but yeah, it's very frustrating to deal with. But yeah, as we were just saying, pound dollar is getting a bullish reading, but I can't do anything whilst it's just in this sideways range. I need to see a real breakout. That was the daily. The H4, however, does look a little bit more promising. We've come out of this bearish trend and we've now flipped into this bullish trend here with the moving average cross. So I think what I would need to see is a new high get printed and then a higher low, and that would hopefully be a 50% retracement that could get me then into a long position. But until that sort of thing happens, I can't do anything here. I know for the most part of this stream, I've just been saying I can't do anything, but at least to this week, we've got markets to cover. I know last week we were just saying that there is nothing that I wanted to trade. At least this week, there are things I want to trade, but I just can't get into, which is a little bit better than having absolutely nothing. CAD yen, as we said, looks really good. I really like that idea. Pound dollar also looks okay, but I just need to see more development. There's nothing there yet. Pound Aussie, interesting. Actually, there might be some sort of idea. So this one's a little bit tricky because it depends where you draw fibs from. Realistically, I would draw a fib from this low, but if we do force it a little bit and we're a bit more aggressive, we could consider this the previous low. Again, it's fully discretional. This is the downside of technical analysis. But in this case, this is a really nice 50% retracement. We're still in this bullish trend on the H4 to continue higher. So I do like it, actually. The problem, though, is this daily time frame on pound Aussie that we've been watching on this stream. So we're coming into this sort of double top. Oh, sorry, we did come into this double top and saw a pretty sharp projection to the downside. We've also got the daily 200 moving average that acted as a little bit of a dynamic resistance. So even if we did manage to get in on the H4, we've still got a lot of issues to deal with slightly down the line. So are we going to break this level? If we do, are we going to break higher than or above the 200 moving average on the daily? If we do that, okay, we're very likely set to continue higher. But That's two pretty major levels we'd need to see this market break above. Do I want to bet on that? Well, the fundamentals are there and the H4 trend is there. So yes, maybe I do, but I do think it's a little bit of a risky one. So I'm going to add this to the watch list. I might take this later this week or maybe later today. Pound CAD. Actually, Kurthamen. I'm sorry, I'm really bad with names, but please don't take offense. 2288. I would, but it's the end of my segment. So we have Tiger coming to take over the show. Guys, I will see you all very soon. Thank you for being here. I'll see you tomorrow. Stay safe. Don't get margin called and enjoy the rest of your day.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Wednesday, happy hump day, rather. I hope you're all doing wonderful out there. I'm on here to close out the show for the day. Just another reminder, guys, for Ola Prime, they do have a ticket giveaway. So if you happen to get an account between now and I do believe tomorrow evening here in the States, even if it's the smallest at $5,000 account, you can actually get entered multiple times depending on the size of the account that you get to win 2 free tickets to the World Cup final. It's going to be over in MetLife Stadium, New Jersey. Round trip flight for 2 covered, hotel for 2 covered as well. And that's really all it takes is just just buy the account. So with that same with the same code, you can obviously get entered. So there you go. Whether it's a $5,000 account up to a $300,000 account, again, the higher the account you purchase, the more entries you get. They kind of stack on top of each other. So a really cool thing Ola Prime is doing. And just looking at the dates here, the entries close tomorrow at 2200 UTC, which I do believe here where I'm at is I think it's -5. Where Nick is over on the East Coast, New York City, that's -4 UTC. So if I'm doing my math right, you guys basically have till tomorrow evening to do that. If I've got my UTC right, okay, that's the Greenwich time or mean time. So, and then they'll draw the next day. The winner's verified. You basically have 6 hours to prove that you've got your travel documents. Fly out on the 18th. The game is on the 19th, which is Saturday, I do believe, 19, 20, 21, let's see, 15, 16, 17, 18, 19. No, Sunday. I'm sorry. So the game's going to be on Sunday, and then they'll fly you back home the next day. So definitely a cool thing they're doing. There's still time, guys. Again, a little more than a day and a half or so. If you guys are looking to get an entry anyway, you might as well take advantage of Nick's discount code there, A1 Live. QR code is there as well for the 35% discount, as well as a chance to get you a free ticket, free couple tickets for you and a +1. So anyway, just wanted to lead off the show with that for you guys. And you can always go to Ola Prime. I think they'll probably put the link. In the thing. James, if you could possibly throw that in there. And yeah, good luck to you. Somebody's going to win it. Might as well be one of you guys. So anyway, let me know, guys, for any specific tickers you'd like me to check out. And we can definitely get that up and rolling for you. Let me get this skipped over here so I can see what I'm doing. Okay. Where are we at today? Well, ladies and gents, go back over here to my top setups. So if you guys have noticed, and I'm sure Nick probably touched on this earlier, but he did kind of change the scoring around just slightly. to get a few more opportunities on the bullish or bearish list. So now the scoring starts at 4s. 4 and higher is now bullish. -4 or lower is now bearish. There's a lot of assets, and it makes total sense why he did this. There's a lot of assets that typically stay pretty neutral. There's sometimes you'll see something pop on the list, and it hadn't been on the list in a month and a half, 2 months. But those items still move. So kind of the reasoning for that was to get some of those assets some love. One thing I did kind of realize what kind of the way I'm attacking this, because, you know, there's some of us on the team, we wait for the 5s. Some of us wait for 6s and 7s. That's still up to you guys how you want to do it for you Edge Finder users out there. But one thing that I think might be a help, and you guys I just figured I'd share this with you guys. If we look at like Kiwi dollar as an example, which is now giving us a bullish 4, one thing I think that I'm going to start doing, if I go to the Forex scorecard and I look up that asset, Kiwi dollar, if you take a look, now the Edge Finder history is at the bottom left for all these assets. So with today being a +4, that's obviously higher than yesterday. So what I'm seeing is this. If you look back on the 26th, we were at a bearish score, quite a bearish score. A lot of those dollar-based pairs were, where the dollar was the second currency in the quote. So just look at the trend of this, from very bearish to just moving bullish steadily and over time. So this right here in itself is kind of a good little signal, if you ask me. It's one thing to go from, you know, +11, +12, all the way down to +4. But it's a different story when you're seeing something that's all the way down here at -14 at one point, and the trend of this thing is starting to move up. It's kind of like what Nick shows in the COT report when he shows kind of the history of the COT. Good example of that is, gold and the dollar, how it goes from, you know, wherever it's at to there's more bullish orders stepping in. There's more bearish orders getting closed out, things of that nature. So I don't know what you guys thought, but that was kind of the first thing I thought of when he mentioned the scoring change. I believe it was yesterday even. So play around with that, see what you guys think, and it's a pretty cool thing. And he also did, of course, add in the put and call wall over here as well, which is a really cool new feature to kind of see where those orders are. Those orders took place above and below price. So that's another cool feature he did just add. Looks like a lot of the ETFs are kind of how he's built this around. The diamonds, the Qs, things of that nature for the stocks indices, the GLD, which I know he trades quite often. So yeah, really cool features he's adding. As always, guys, if you have Edge Finder already, there's no upcharge on this. Any improvements he does, which is quite frequent, these are built in. Same thing with the net options flow tool he added just about a week and a half ago or so. So really cool stuff happening with the Edge Finder. Yeah, just wanted to kind of touch on that, and then again touch on the ticket giveaway for Ola Prime just for simply purchasing an account with Nick's discount. So anyway, back onto the charts over here, taking a look at the top setups, going back over here. Again, we now have some new items on the list in light of the scoring change. So we got Euro Aussie shorts, we got Euro Kiwi shorts, we got Dow, and we got that Kiwi dollar that I just mentioned. So figure we'll take a look at some of these since they weren't really on my list this time yesterday morning before the scoring change. So let's go take a look. The Dow, as we know, has not really been affected as much from that sector rotation that the S&P and that the Nasdaq was when they were kind of going sideways for a while. The Dow just kept going up and up and up and up and up. Okay, bypassing the moon, trying to go to Mars. So let's go take a look at that, see where we're at with it. And again, just throw any tickers in the chat there that you guys want looked at, and we'll go from there. Daily trend still easily intact. Nothing but higher highs and higher lows. The EMAs are going in favor as well, so I like that. Going over here to a 1 hour chart. And of late, I don't really think it's been given anything too great. I would like to see a break of this structure right here. And if so, I don't know. Do we have anything down here in this wick on a smaller time frame? Go dig around and take a look, see what we got. We do possibly have a little bit of a 30-minute zone. Now, obviously, guys, you know I say this a lot. The smaller the time frame you go, the noisier it can get. But by definition, there is a zone of demand right here that we could definitely keep an eye on. And then again, this is where this is, I think, a little bit of an aggressive approach, especially since it is just a +4. It's not like it's a +11, +12, +13 where we can afford to be a little more aggressive. But it is a zone to keep an eye on if we're wanting to be a little aggressive on the higher on the curve up here. But obviously, the lower you go, the higher the probability you get of a bounce. So ultimately, still that 50,400 level is still the main one I'm personally watching. But hey, look, smaller time frame. If you get a drop into one of these higher up zones, depends on what the volume picture looks like. Are we going to get a bullish engulfing candle, or are we going to get a hammer candle body at the top with a big wick underneath? If so, okay, great. Maybe we could take a look at that. Might be a possibility. So that's Dow. We just mentioned the Kiwi dollar, so let's go have a quick look at that for you guys. And I do see you've got pound dollar Neo Jonas, so we'll definitely take a look at that right after the Kiwi dollar here, since it's on our list. Now, on Kiwi dollar, I did observe a 4-hour demand right here that I'm going to start keeping a little bit of an eyeball on. We did recently break this overhead supply, and this is basically where price based out before giving us a bunch of green candles and then breaking above. So we got to break. We got to close. We even got to close on the 4-hour. It just took a little bit longer. It took about a day longer. But we got to break and close. So I do want to keep an eye on this area down here. One negative I can see already on this 4-hour chart, while we do have a nice gap showing demand exceeded supply, the volume wasn't really the greatest. So we're looking at this green candle down here, guys, or down here. Look at this. So that right there is telling me perhaps effort's not really matching result as good as I want to see it. But it is a zone. It is a zone nevertheless. So 4 divided by 4, which is 1 hour. Do I have a gap on a 1-hour chart? Well, let's go have a look here. We do, but yeah, now that I dig down a little deeper, I just don't like the volume picture, guys. I got blue candles. I got a tiny green candle, and the volume didn't start picking up until this candle right here. That's where the VSA started to pick up. It didn't really happen in the zone itself. So now that I dig down a little deeper, nah, the effort's not really matching the result. But again, you just never know. I tell you guys all the time, I look at a zone that sometimes I think there's no way in heck that it's going to work out, and they often work out. It's just the power of the way these zones operate. So going to keep an eye on that, but at the end of the day, probably the lower, probably further down the list might be a little higher probability. So that's K dollar. You brought up pound dollar, which I do believe, Neo Jonas, is a +8. So this one actually gained some strength. Gained 2 points of strength since yesterday. So remember, for the dollar, yesterday we had a negative CPI report, which was bearish for the dollar. Today we had a bearish PPI report, which was also bearish for the dollar. And if we go to the dollar index itself, this thing has completely dropped. I don't know if it's updated just yet. Let's go double check. And it has. So there you go. Dollar went from 60% yesterday morning before CPI down to 55% beat rate. Now today, that report went from bullish and it skipped neutral and it went straight to bearish. So it basically shaved off 10%. So we're at a 45% beat rate. So I still feel like it was neutral as of yesterday's report. Today made it neutraler and a little bit closer to the bearish territory where the Aussie's at. So again, it just depends on how you look at this. I always look at the 40 to 60% range as kind of neutral, or well, more specifically, the 41 to 59%. But we're pretty close to bearish for the dollar. That's not something we said 2.5 weeks ago when we were at 100% beat rate. But this thing has just lost 55% of its beat rate, over half, in the last 2.5 weeks. So can we sit here and honestly say the dollar is really strong right now? Not at all. Because I do believe we were at a 0 yesterday when you're just looking at the currencies over here, just the currencies by themselves. And that's definitely going to drop the dollar even more. So there you go. It is a 0 at the moment. I think the only thing that's going for the dollar at the moment is the geopolitical situation. With the dollar flow, the safe haven flows, the money flowing into the dollar because of the, well, what are we on now? Day 4, day 5 of the bringing the strikes back on the Iranian targets, the drones and the production facilities, things of that nature. So that's really, I think, about the only thing going for the dollar right now. Would you guys agree? Let me know what you think about that. If we go to the dollar index, and I'll get back to your pound dollar again here in just a second. The dollar index itself, it's just, we had a screamer of an up move. We flirted with that overhead supply, and now we've dropped and just kind of based and died off. So it's just pretty well basing right now around that 101 area. So not looking very strong. And then to go back to your pound dollar that you asked about, that's obviously benefiting the British pound. And that's why we are now getting that. Go get all this back on. That's why we're now getting the very bullish bears. Sorry, I cut off all my stuff. That's why we're getting a +8. So trend is helping. Seasonality, it's a good month of July for pound dollar. Historically, over the last 10 years, typically bullish. No help whatsoever, nor no hurt whatsoever on the sentiment side of things. And now we're starting to get more blue boxes on this particular pair, favoring the pound over the dollar. The pound, as a reminder, is at 60%, so that meets that bullish threshold. So just wanted to, go do a behind the scenes peek at all that before we go to the chart itself. So now that we're on the chart, we have flipped to bullish. Okay, so we had this supply zone I mentioned probably yesterday or something like that. The supply zone that got wicked through, and now we're wicking through again. So again, for me personally, I'm looking for a close. So, if you're asking me to trade pound dollar, at least on a 4-hour chart, I want to see a close above this remnants of this daily supply. That's just the way I like to see it. And preferably even this swing high, which is actually a little further up. So what have we got? 2.5 hours left on this current 4-hour candle. If we get a close anywhere above this blue dash line right here, or I should say the red line right here. So in other words, this swing high. Well, that's good because not only have we beaten or closed above the supply zone, but now we would have closed above the swing high. So that's going to go a long ways for me personally into saying, okay, hey, now I can look for a retracement for a long. And if it keeps going, well, maybe it creates us a new demand zone down here, maybe kind of a flip zone. But the bigger the retracement, the higher the probability that you're likely to get a pretty good bounce. And I'm still keeping my eyes on that 132.5 area where this 4-hour zone of demand is down here. And that's just where really I think the volume picture looks the best on the leg out candle. So this is the more conservative approach. But again, a little more aggressive would be, hey, do we get a close and do we have a new demand zone created somewhere in this area? I don't really see any great volume so far on these legs here. This was ultimately the play to be had, but we didn't really have the scoring on our side just yet when we bounced into this zone on Monday. And the only reason I told you guys yesterday, the only reason I didn't buy that is because we did not get a close right here. Now we did on a smaller time frame, but I like to use the 4-hour. Got the retracement. It said, or it caught the unfilled orders, and it did give us that push up. So anyway, that is pound dollar, and of course, it got a couple points of bullishness since basically this time yesterday, from a +6 to a +8. So yeah, that's, I guess, the two options. I don't really have a good zone of demand up here just yet, unless we dig a little deeper into this area here. And maybe we could look at this. Maybe we could entertain this particular 2-hour candle right here. As always, guys, not financial advice. It's just what I'm going to be keeping an eye on. And kind of like the picture we just looked at for the previous asset, if we get a drop in here, do we get a bullish engulfing candle? Do we get a hammer candle with a wick underneath? Do we get volume stepping in? If so, maybe we could squeeze out a little trade on that front. But I think that would be the more aggressive approach. But there's no denying the strength being a very bullish +8 now, because that changed as well. Remember, very bullish was a 9 or higher. Now it's an 8 or higher. So, and that's the beauty of the Edge Finder. There's always something to improve. They do a lot of study, a lot of research on the overall results of this. And every now and then they may tinker with some things like that to kind of change it around. So I like it overall. I like it overall, especially when I go to my scorecard, like we just looked at, and look at where price was at to determine if that's a good opportunity. Very bullish to neutral, and the trend is up. It's only getting stronger as the dollar is getting weaker, which is benefiting the British pound. So hope that helps on the pound dollar there. What else you guys got? Bitcoin, Thrive with Sean. Oh, you're looking for possible short, Andrea. Oh, Andrea, I think that's your favorite currency pair. You've asked me about that quite a bit, which is cool. 134.80. Yeah, just be careful with the shorts, because at this point we've broken through the overhead zone of supply. We're getting a very bullish +8 score, and the trend has now flipped bullish by breaking those structures. And the EMAs are now giving us that open alligator's mouth to the upside. So just be careful with shorts. But again, it's not ultimately 100%, in my opinion, bullish unless we close, like I said, above that white line, which is that former swing high. So that's just my thoughts on it. But yeah, obviously you guys do what you want. That's just what I'm looking at. Okay, we had also Bitcoin. So with Bitcoin, as always, want to double check, see what my scoring's looking like. I know it's neutral at the moment, but where is it specifically, even though it's neutral? Bitcoin +3. So it's really getting most of its love from the technicals, which I kind of find that hard to believe. We'll take a look at it anyway. Sentiment -1, eco data +1. So that's those two numbers right there cancel each other out, and we're just looking at a +3. So, but hey, if we get 1 point of something somewhere, whether it's sentiment on Friday's COT report or some help from the dollar, well, then this could possibly go bullish. So we might as well plan for it now, right? This is where it comes in handy to start marking your zones, anticipating that we may possibly get something on a bullish or bearish list. So looking at the daily over here, this is a very similar picture, I think, to what we just looked at on pound dollar. We're in a supply zone. Talking about this 4 hour over here. Let's go back to let's see here. Refresh. So we are currently, guys, bouncing into this supply zone, which we've already touched twice. There's a wick here on the daily. There's another wick here about a week later. And now this is now the third time we've went into this zone. Only now we're going a little deeper. So I ultimately, if this happens to give us a bullish call at some point in the next day or 2 or 3, I would want to see the same thing that we saw there, that I showed as an example on pound dollar. I want to see a break and close above that zone. So going over here to my 4 hour, and I'll just go to a 1 chart view now that we know the daily picture. Yeah, this is basically what I would want to see. So let's do this. Break and close anywhere above here. Retracement. Maybe we could find a little bit of demand in this area. Let's go have a look. Okay, that would be a possible bullish buy. Now, as far as demand over here, this is a 4 hour chart. I don't really like the 4 hour look. So what's a 6 hour give me? Nothing there. 8 hour, 10 hour, 12 hour. What about a 2 hour? Because what I see is a big red juicy candle right here on this VSA candle, which is basically this leg out. So my goal is to see if we have some basing in this area. Now, there's not going to be a lot of volume in that area, but the leg out, there's no arguing the buyer stepped in here and they're attempting to push through the supply. 1 hour. Okay, so probably what I would do, if I'm looking at this just on a 1 hour, I do have kind of a thicker emoji, doji, a fat doji candle, if you will, with wicks on top, wicks on the bottom of that body, the real body. So that is a possible consolidation, but I would probably just want to incorporate all this down here too. I would personally probably incorporate all this. So looking at this batch of candles, but ultimately that 1 hour is at the top of the zone. So if I go back to the 4 hour, it basically encompasses this whole candle right here. That's one candle. That's two candles. You could say that that's partly a third candle, and then this might be the leg up candle or the kind of the push up. So that's within 3 candles. As long as it's under 5 candles, I'm fine with it. 3 candles suffices. on that 4-hour time frame. But it might as well just pull it forward, just focus on that 4-hour candle, which again encompasses the 1-hour candle at the top. So 4-hour, 1-hour confluence with a very strong leg out, with volume clearly picking up, and the continuous higher highs and higher lows through this supply zone. So that's really the only thing I'm looking for on Bitcoin, along with Edge Finder to give me a bullish bias, is to get a close somewhere up in this area. Just give me a close anywhere up here, and then we could possibly look at this zone as a place to possibly buy. Okay. I wouldn't get too aggressive on it, but that's a start. You break that supply, that proves that we had some underlying strength right here, because this is where price kind of dropped based and then rallied back up. So this is kind of your reset. The reset has the base that would break and close above the structure. So I'm interested to watch this area. In fact, I'm going to put an alert there myself. I'll just throw that out a couple weeks or so. I'll just throw it out through next Saturday. There we go. Good to go. So I'll be watching that 63,000 area there, just shortly below it. Now, what I would like to see, I know I drew this yellow projection up like that, but what I ultimately would like to see is some manipulation happening. So if we have price come down after we close, retrace, this is ultimately where I want to see things kind of slow down and manipulation happen, which would show me that the banks, the institutions are likely accumulating, manipulating and accumulating so that they can add more position before ultimately getting that spike down, which would be your my goodness, spring, your spring candle, guys. So that's what I'd be interested in for Bitcoin, about your 62,800 level. Bitcoin is a major supply, is in a major supply. Yeah, exactly. Oh, you're looking to short, says Thrive. Okay. Well, think of it this way. Just think of it this way. So you're correct. It isn't a major supply, but it's already been touched once, twice, and now a third time. And the third time is going even deeper. So, if a zone is ultimately strong, it'll ultimately prove it just on that first bounce. But in this case, what you got was a bounce down, and it didn't even make it down to any major demand zones. And then it came back again, retraced again. You could probably argue there's a zone of demand hiding somewhere in here. And now we've gotten a higher push. So all I'm saying is be careful, because you're already almost through the top of that zone. You like about $210 or so on a $65,000 instrument. So yeah, just be careful with it. That's all I would suggest. Let's see here. And then you also put Amigo FX Swiss yen. Yeah, let's go have a look at that. Swiss yen is giving us at the moment a +2. So a little bit bearishness on the technicals, straight up 0 on the smart money, dumb money relationship, +4 on the eco. So it's got some pretty good fundamental data in favor of the Swissy over the yen. So that's kind of the basis. Now we still need a few more points, 2 to 3 more points for me to look at it as bullish. And we have to overcome the moving average relationship that Nick has built into the technical piece, along with whatever the sentiment picture is. So let's go have a quick look at that from the main screen over here and see where Swiss yen is on the sentiment side of things. Swiss yen +2, zeros and zeros. So there you go. And then on the technicals, okay, so -1 on the technicals, -1 on seasonality. So Swiss yen 10-year average traditionally goes down, historically goes down, but it's just an average, and there are outliers. So keep that in mind as well. And then again, you are getting a little bit of love from the fundamentals, but not a ton. So we'll just go look at it on the technicals. Swiss yen, see what we got. Let's see here, Swiss yen. As always, I want to see the daily first. All right, so I see lower lows and lower highs. I see, is this the possibility of a higher low? Well, we don't know unless we break this swing high, right? So for me to get involved in Swiss yen, if we start seeing a bullish score on the Edge Finder, I want to see a break of structure or a change of character. This is what's technically called a change of character. I just call everything break of structure. More specifically, it'd be that one. So it looks like I already drew this picture up. Okay. So right here, this is what I think I showed at the very end of the show yesterday. For me to get involved, I need to see at least a break of this structure. And then I still need a retracement to a zone of demand. So this is really the next step, just to finish for you, Amigo FX. Let's see what happens. Let's see if we can close above 201.58. If we do that, and it looks like it's trying as we speak, if we come in tomorrow and we've broken this structure and closed, well, then we can look and see if we have any underlying strength somewhere in this area. Okay. So I would just say, for me, I'm sitting on my hands, not only because the edge finder is given neutral, but we just gotta prove with a change of character that it's at least halfway trying to push to the upside. So anyway, guys, that's all the time I have for the day. Stay safe out there. Definitely go take advantage of that Ola Prime tickets. If you guys are interested in getting a code, you're already getting a discount from Nick, 35%. Again, the QR code is on there, and now you've got a chance to win a couple tickets to go see whomever wins. I think Spain's got it in the bag. You guys let me know what you think tomorrow. We can discuss more about that. But anyway, guys, have a wonderful rest of your hump day, and we'll talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.